So after I did all that, I said, okay, what else is going to go wrong? Better make sure I have all my keys on me, and I did. So I got one more thing to go bad today. I'm trying to figure out what it's going to be. You know, things come in threes with me. Usually after the third thing, you know, things really tend to be okay. But I've never had that problem before. And that's all, I blame it all on this coffee I've been drinking. It's a huge laxative. I put a little bit more of that MCT crap in it this morning, and okay. Good morning, retail traders. I'm Washboardjim, where I talk about chart patterns, moving averages, and being in the now. And this week we're talking about being in the now. I think a lot of people, once you get to trading a while, you understand what I mean. That's been probably one of my biggest, I mean, I'm good at it, but it's also one of my lacks. Why did I say that? And my ding-a-ling just went off. We're starting to look at penny stocks a little bit more in this room. So I'm going to need to get my scanners going on my penny stocks. ATPC, right off the bat. We had one yesterday that looked kind of interesting. Chow, I didn't quite understand why I had that big dip. We're at a buck.
And building momentum. BTTC.
BTTC, Axel,
BQ.
MIG,
ANF. Big spread. NUVB.
CLT,
SCMC resumed. BTTC.
CHMI,
FTRE. Watch the spread.
GLXG,
8XIL picking up steam.
JZXN, Axel,
TETH halted. BTTC. BTTC breaking out.
CNRGP, CRBP, CRBP,
SRPT showing strength. Rhyme. CLYM.
Okay, Axel just went below my support.
Down 26.07 after
OXM,
now
OXM,
is up 100. NASDAQ
Hess,
is
BTTC. We're at the first support at the 9. That's the 5-minute. So we got first support right here at 796. If it don't get halted. And the second one's right down here at 685, and the third one's off the 200 EMA.
KNDR,
NXDR,
KZLT,
Put
ODYS,
MCRP, MIGI, MIGI, MIGI ready to explode, MIGI, RZLT halted,
Where's on my? There it is.
MIGI, MIGI,
Open might be interesting for long.
MIGI, MIGI coming alive, MIGI,
BTTC got halted.
JZX halted,
MIGI,
MIGI,
ACCL,
MIGI consolidating, MIGI, Velo under pressure, MIGI, MIGI,
MIGI.
RZLT, halted on the circuit breaker, $1.38 at the highs, still
BTTC halted.
7% on their failed trial results.
ENRG,
RZLT.
Ford's under $10.
DDE coiling,
No, it
BTTC
ain't. No, it
halted
ain't.
now on a circuit breaker, Bravo Tango Tango Charlie.
SPX. We're consolidated here at support level. Spies at the VWAP. Spies at the VWAP. Spies at the VWAP. Oracle had a little bounce. Spy off the VWAP. PETS, huh? PetMed Express. We should be resuming from the halt here on BTTC. MIGI. Oh. Commercial on. There, we're open. Beat looks like it's running a little bit. Target $8. What? Benchmark upgrades Heartbeam to a buy, maintains a price target at 8. Beat. Yeah, it looks to me like BTTC is going to be a halter, which I don't appreciate. NCPL. I'm going to get me another one of these things going here. It takes a lot of work when you're trading pennies. A lot more work than it does when you're trading the SPX. The SPX just hit the 200. Wonder why. Maybe that's one of the reasons why I like trading the SPY and the SPX. Just so much easier on my brain. I'll go get my coffee. SPY's up double top at resistance, triple top. Oracle. And then we got that chow from yesterday. At 106, 104, we're at 89. It's interesting. Beat is moving. So is Chow. Chow just made 9 cents for me. 89 to $1. SPY's hovering above the 63 EMA on the 1 minute. Google had a little knife here. AMD at the bottom. NVIDIA at the bottom. Oh, Apple. Apple pulling back huge. Now this is what they've been pumping a lot, Apple. I don't know, I think it's way overpriced, but they've been really pumping it hard. Meta is up, the other three are down. Go get my coffee. I'm watching the video. The video. I'll pull back here on. Apple, the 275 strike, or the, yeah, I like that better than 27750s. But that's got more volume. And then you got the 280s. This is for tomorrow. You got NVIDIA with a new low, double bottom off a wick. I'm gonna scalp Apple, I think. And the video had just had a new low. $162. I gotta get my coffee. NVIDIA new low. Apple, I got the 275 at 162 per scalp. Okay, I got 682.48 for the SPY. Parabolic pullback. SPX looks tempting here too. What are the 6880s? Those are the ones I traded yesterday. NVIDIA. SPX, the 11th, the 68.75s. 75 or the 80s, but I'm going to do the 75s. I'm going to clean this up, start fresh. Go to the 5 minute, do the hour first. We're at the 63 on the hour, so this should hold. And I'm going to put a little price line right there where I think it should hold at. This will be a triple bottom. Okay, prepare ye in the name of the Lord. What happened to my line? Fuck. I had that on the 1 hour. What happened to my line? 380. $3.80. Damn it. Apple's at 148. It's not working out too good. Come on, SPX. Damn. SPX at 380. I'm gonna go get my coffee real fast. Okay. 3.20 on SPX. I got 320 and 380. $390 now, 380. A plus intro. $4. We're at the 21. So if we break the 21, we can get to the orb. If not, we got a cup. We could get a little handle here, hold the 9, and then break. Or we break the 21. I got 4 contracts, 1 at 380 and 3 at 320. Do 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 do. Let's go to town. Let's go to town. Let's go to town and bite on me. Break the 21. Let's have some fun. Let's go to the town on me. I'll buy you a beer. I'll buy you a drink. Just give me a smooch. I want to hit the orb. That's not much to ask. What do you think? Whoa. Washboard Jim, I got to take my little niece to the doctor. I think I'm going to go ahead and take some profit off this trade right now, and I'll be back around noon, okay? That's all right. You're up $100 a contract at $440. You can sell it here, baby. I'm going for the orb. Jingle bells, Santa laid an egg. We're now at $4.60. I love trading this thing. Did I ever tell you that? I really do. After all the shit I've been through. $4.80. $5. Woo! $5.50, man. Jim, they're at 560, and we're coming up to the 50 SMA. What to do? What to do? What to do? Well, I'll tell you what. Take a little bit off the table here. Do it and do it now. Leave a couple on, or maybe one. You ever heard of getting out at 590? Woo! Santa Claus is coming to town. Santa Claus is coming to town. Santa Claus is coming to town. He's making a list. He's checking it twice. He's finding out who's been naughty and nice. Santa Claus is coming to town. And we're at the orb. Jim, is it true that you had an accident this morning and you shit on yourself? Yes. I hate to say it, but it's true. I've never had that happen before. Narcissistic Jim. Apple's at 196. Apple, how does he do it? They're at 620. God darn, things are at 690 now. We're at $2.18 on Apple. Make a business decision. Okay. Well, $2.36 on Apple. Does anybody see what I see? Jim, I'm new to your channel and I wanted to ask you a question. Have you ever had any gay tendencies? No, not really. Why do you ask? Well, me and my boyfriend were sitting here watching you trading, and we've heard you talk about the 200 EMA. Is that mean enema? No, that's a moving average. And usually it's an exit idea. Oh, we were thinking it meant enema. Well, it's not. It's a fast moving average that deals with price action. You sure it's not enema? Yeah, I'm positive. Well, we're going to put it on our chart. Can anybody tell me what the red line means? And the blue line? The blue line's the 9. We had the crossover on the 9. This is beautiful. $2.36 on Apple. That was a great call, Jamie. We're at the 200 EMA. Take it out, Fred. Amazing grace, I'm gonna take some more off the table. Once was lost. Uh-oh. $8. $8 frickin' dollars. Late last night when we were all in bed, oh God, did I just see it hit the orb? $8.60. Ooh. Now you're hitting the orb. This is a double top. $200 SMA. 200 SMA. No, not yet. God darn you. Don't do it. Yeah. Well, I can say I was the first one in them. I hope I can say it and get away with it. Was I? Room? Someone say yes. I gotta watch that video and see what it's all about later on. What the fuck? Gonna keep going. I just left $200 on the table there. Actually left a lot more than that. 2,100, 2,000 plus 200. 2,200. On 4 contracts. Now we're at 1,280. 1,290. $13.20 for SPX. Well, I like trades like that turn out like that. I mean, I'm done for the day. So, I always go back and I look, see what, this really will sharpen your skills up. If you go back and look, what candles cause this breakout? So you got your snake. Just run your channel. What the hell? So you run your channel. And you got your initial breakout candle right here off 3 black crows. Then it came back down and retested the trend line, then created a double bottom. Then you got an inverted hammer, a spinning top, and a hammer. And then this candle went above that hammer. You got a hammer, and she started taking off. So you had the initial breakout of the spinning top, and it wasn't a full breakout yet. Then finally, this bodied candle broke out of the trend. Then it had its little breakout, inverted hammer, and it retested the double bottom. So that's your chart pattern, was a double bottom. You got to look for, once it breaks out of here, you got to look for a pattern. Sometimes it could be an ascending triangle. It could be a triple bottom. It could be a rising or falling wedge. It could be a symmetrical flag. It could be inverted head and shoulders, which you do have right here. You have an inverse head and shoulders with a double bottom. But I guarantee it, if you start studying after all them breakouts, you can go to every chart and always have a pullback, something, an apple. When I jumped in Apple, And it went down on me a little bit, but I held on because the SPX was getting bullish on me. And you got the same kind of shit that goes on right here. I jumped in. Let me see when I jumped in. I jumped in Apple right in here. Now, I could have probably got in a little bit too early, but it just looks so cheap. That's where I jumped in Apple. On these two spinning tops. So I'd say I got in that one probably early. But I watched these four crows, and then we had this hammer, which is a bullish candle. Then it came down, and I said, I'm jumping in this thing. It was bounced off the orb. I figured it would just kind of just hover right here and break out. And it went sideways, and then it came back down and hit that orb the second time. And I was already in the SPX, so I didn't pay no mind to this. And I was down like $30 a contract. Then we had the tweezer bottom. So this one, then you had your first breakout. You had a doji or spinning top doji. And then you had all these hammers, hammer, 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 up to the 63. So this was definitely a double tweezer bottom. And came back and retested that tweezer bottom with that spinning top. So this one doesn't have much of a pattern. Unless you want to call a wedge. Okay, SPX is pulled back to the 200 here. What one were you in? Pets. Now, I like the news on pets. Takeover bid. Now that, you would say that kind of news is, oh, Was it? I think I would have set a stop loss down here at 295. So when you're trading, I'm a little rusty at it. I haven't traded pennies in a long time, but one of my things is got to have news, and it had news. And what kind of news will drive the stock? And you'll get used to recognizing what news will keep a catalyst going, keep the stock running, and what news won't. Now, this is speculative. After a company announced it received an unsolicited and non-binding acquisition, and that's good news. For $4 a share. That's on the 5 minute. Let's see what the 1 minute says. Yeah, the 1 minute we kept bouncing off the 200 or the 6. Is that 63? Yeah, the 63. So that's your support. We'll see if this holds right here. You hit it here once. You hit it here once. So that's like your solid support. And I'd probably put my stop loss right under that. Somewhere a little bit below that right there. Then it could easily come down and hit the orb and bounce up off the orb. When you're trading penny stocks, you got a lot of rookies trading them too. And they'll get stopped out or they'll sell out, and sometimes a little bit too early. They're more or less trading blindly. There's that piece of crap. This guy's a punk. I got kicked off of Stock Twits. I said, Bob Iger, when are you going to put out your next tranny movie? I got suspended from Stock Twits for a year. I've been worried about anytime you mention the word tranny on Twitter, they'll that's inappropriate. This guy's
in, I think, pretty enjoyable ways.
Yeah, no, it is interesting. Of course, Steamboat Willie, it was kind of a short of its own, about 8 minutes long. Obviously a lot longer than 30 seconds, but nonetheless not particularly long. Sam, I wanted to come to you on some broader issues in the time that we have here as well. You're going to exit the year, I believe, with about 1.9 gigawatts of compute. You've said, I believe, publicly around a $20 billion annual revenue rate. Does a deal like this help you think about an increase in terms of revenues and or your need for compute?
Yes, I mean, we expect this to drive incremental revenue and also just delightful services for our users. We have a lot of other things that we expect will drive incremental revenue, but the only way we can deliver on that is with more compute. So we will continue to build out compute. We'll try to do a big multiple on that 1.9 gigawatts over the course of the next year, and we'll keep going from there.
Yeah, we've been talking a lot about Oracle this morning, of course, and so much of the investment perspective on that company comes back to your own and your ability to make good on the $300 billion commitment you've made in terms of buying compute from them. Why are you confident, because others certainly are at least questioning, in your ability to meet that obligation over these next 5 years, Sam?
The value that we see people getting from this technology and thus their willingness to pay already today, to say nothing of the models that we have coming in the coming months and years, makes us confident that we will be able to significantly ramp revenue. It's obviously unusual to be growing this fast at this kind of scale, but it is what we see in our current data. The model's ability to do really increasingly valuable economic work in larger and larger chunks. I think you'll start to see this with our next model, and then more of the next one after that. We are confident we can continue to drive the revenue growth to meet this compute ramp. Without the compute ramp, of course, we can't drive the revenue growth, but we see way more reasons to be optimistic than reasons to be pessimistic. Of course, we'll continue to be responsible, and of course, we'll adjust our plans as necessary if something happens that's not what we expect. But given what we see right now, the demand in the market is pretty extreme, and the overhang of what these models are capable of, that the world has not yet figured out how to build into their workflows is also quite significant.
Right. You know, I do wonder, though, specific to Sora and the discussion we're having, it's more expensive for you, right? I mean, it requires more compute. And I would assume, are you losing more money on every Sora video than on a simple query? And do you start charging in a significant way, particularly given you're going to be paying a licensing fee as well to Disney?
We do charge today for storage generations beyond some increase.
To be honest.
And I'm sure we'll continue to evolve the business model there, but users have not indicated any lack of willingness to pay for generating videos that they love. In fact, if anything, there's been much more of that than we initially expected. So yes, it's more expensive, but people...
Okay, this is the third time down now.
...than they do for an image.
And you see price elasticity there in terms of what you can charge?
It seems like it.
I have always wanted to be a Disney princess. Sam,
there you go.
It's Sarah. There we go. Thanks for the solution. Look, as you know, in the market, it's gone from very optimistic to a little more scrutiny on the AI trade. And I know you're not public, but there are questions, for instance, following up on the revenue question. Can you tell us a little bit about trends in ChatGPT since Gemini 3 was launched by Google and outperformed a lot of the OpenAI models?
Gemini 3 has had less of an impact on our metrics than maybe we feared. We will very soon launch a new model that we're quite excited about, as well as a handful of other features in response to their launch. You know, we have twice before seen a competitive threat, and I believe that when a competitive threat happens, you want to focus on it, deal with it quickly. We call that a code red, sort of a 6 or 8 week focus period, and then you deal with whatever you're going to deal with and you know, get back to a position of clear leadership and move on. So that's what we're doing with Gemini. This is a pretty standard thing for us. I expect we'll exit it by January in a very strong position.
Yeah, because that's sort of the question now, is it's obviously becoming a very competitive race, both technologically and for market share. So how do you expect the sort of market share battle to play out, both on the consumer?
Sarah.
We're back on Morning Trade Live. All eyes will be on Broadcom after
Nvidia.
the chipmaker will report earnings for its fiscal fourth quarter. Expectations are for adjusted EPS of $1.87 a pop on revenue of
Okay, we got 3 black crows.
$17.5 billion, as investors will be eagerly.
Could I ask you to shut up? 3 black crows with a tweezer bottom. Jimmy's getting ready for his next entry here. So let's I think I need to turn on the heater. It's 68 degrees in here. Little nippy here. Little bit nippy. We're going to the orb. We're going to the orb. Orb support with an inverse head and shoulders. I think this is it. I really do. Do you understand? Someone say yes. Nvidia. I'm going to start a position on the SPX at $6. If I can get it. There it is. Right there. Now we can go down one more 570. Let's get it. Come on. Get ready. This is the right shoulder the second time. Do you understand? $5.40. All right, let's move this out of the way. Right about now. $5.10. $5. First one at $5. We're at 450. Amazing grace. I've got a hammer. Inverse head and shoulders. Oh my God. How's he do it? Inverse head and shoulders. Left shoulder, right. Left shoulder, right. Right. I don't know how he does it. $5.70. $5.80. $5.90. 620. Damn. 650. How's he do it? How's he do it? I'm going to get up out of my chair and I'm going to take some profit off the table here. $6.90, $7. Oh my gosh. $7.30, $7.40. Profit, 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 profit. $7.70, $7.90, $8.10 at the 200 EMA. Oh my God. So before I go take a shit, let's talk about this trade. So Jimmy called the bottom down here and we run it up. And I sold it. I waited for the pullback. So I patiently noticed that we had 3 black crows. And then I got to looking at it and I said, we might touch this orb. And then after I saw the orb, I realized that that was an inverse head and shoulders, which gave me the catalyst to take that trade. Left shoulder, right shoulder, right shoulder. Now anybody that watches me trade the inverse head and shoulders knows that that second time it touches the right shoulder, that's definitely a confirmation. So I had 2 reasons. I had the orb and I had the second touch on the right shoulders of the inverted head and shoulders. And I simply took it up to the top of the orb, 6869.47, and I got pushed that trigger. We had the 200 EMA, we have the 50 SMA, and we had the orb. Now if you'd have waited to sell it at the orb, you might not would have got out at that price. Do you understand? And if you noticed that we hit resistance and resistance, which we could call this a head and shoulders. A sloppy one, but it is. That was also the VWAP on the /ES. Oh my God. Yes, it was. Yes, it was. There's 3 reasons to take that trade. Not 1, not 2, but 3. Oh gosh, I'm getting old. Well, I saw the orb on an inverse head and shoulders. The slash ES hit the VWAP. I took the trade. I told the room we got it made, and we run it back to the top of the orb. I'm Washboardjim. I'm about to make a burger. I'm gonna put 3 pickles on it. Some sharp cheddar cheese. As much as I please. For lunch. Marley, you got some big boobs. Marley, you have big boobs. She's got the biggest boobs I've ever seen. It's the only reason I like her. Now, she's kind of growing on me now, which I don't know. I don't know if that's a good thing or not. I think it's time for lunch. When I retire, I'll be sitting on the beach. All the girls will be in reach. I lived in Hawaii, Mahalo, yeah. When you're a resident of Hawaii, you're still a Haole, but you're better accepted. Mahalo. I can get away with using aloha because I lived in Honolulu. It was meant for me. I lived up on St. Louis Heights, overlooking the city of Honolulu. Okay. That's it. Oak. That was a good trade. Right now I'm up to about $3,000. I'm looking at other rooms and they're having a hard time right now. Trying to figure out this market. And my advice is to be a little bit more patient. Because we got the end of the year coming up. People are positioning their portfolios, getting ready for the new year. Some are taking profit. We're going to have a new tax code coming up, which is going to be beneficial for investors. I'm not too worried about the tariffs or the inflation that they're talking about or anything like that. I would kind of like to see Powell get ahead of the curve instead of trading behind the curve. It's like they made the mistake during the Obama years to keep the interest rates real low. I think they did that for political reasons. And now they're keeping them too high for political reasons. And I don't think the market really cares. Now, if you're like here, I mean, you know, look at us pull back. I've relaxed. I got out of the trade. Now I'm back at my entry price right here at $6. So I got to think about this, you know. Can we hit the VWAP again? Or do we stay above the VWAP and we stay at that orb? If I think that's the orb. No. Right now, the only thing holding us up is this thing right over here. So I'm going to wait. I want to see if we can get back down here to the shoulder line again or break the resistance level. So I'm going to go make lunch. And plus it's 10 o'clock. Fat cats are at lunch. Today's Thursday. Tomorrow's Friday. There's $6 to $6.80. $7 right there. I got to turn on the heater, get this place warmed up. I'm cold. Too cold to be trading. 68 degrees in here. I got goosebumps, chill bumps on my body. There's a lot of mixed messages out there right now with the fat cats. They keep saying we're in a bubble, we're in a bubble, we're in a bubble. And the sell-offs are a little bit more extreme, like this morning. I got in a little bit too early on that trade, but still yet it was a good trade. I guess it goes down to instincts. Takes 28 times to form a habit. I was at Vegas 94. And we went and bought us I worked in an art gallery and I had these big cardboard box. And I took the lid off this big box. It was like map boards come in 40 by 60. So I had to create a craps table. And we sat around for about 2 or 3 weeks every night playing craps on this table. We created a little craps table, and we went to Vegas, and during that period I learned how many times it takes to form a habit. And I also read in a gambling book that on the craps table, if you count 28 rolls after snake eyes, or if you like, yeah, snake eyes, count 28 times, and usually on between the 29 and the 32 roll, you'll get snake eyes again. Sometimes it'll go a little bit over. So we'd roll the dice and see what, once we hit snake eyes, we would count after that period of time. And that's when I learned about forming a habit. So every time I look down here and I see a breakout, I'm forming a habit by watching these candlesticks and see what they look like, see what kind of flags they form. Here was a tweezer bottom with a hammer. So I was pretty much sold. We had the 3 black crows, and then we had the tweezer bottom with a hammer on that orb. And it bounced up. And then we had an inverted hammer, and it bounced down. So we had a double top with another inverted hammer, inverted hammer, inverted hammer, and it's pulled back. Inverted hammer. See what happened here? You got inverted hammer, inverted hammer, 3 black crows, inverted hammer, inverted hammer. Now this is an inverted hammer to the upside. I used to get chewed out. People thought they were smarter than me. Oh, you can't trade on the 1 minute. And I'd be getting in and out of trades, and they're sitting there like a lump on the log, not in a trade yet, using or getting in 1 or 2 trades a day using the 5 minute. And it's okay. I mean, you can trade with a 5 minute, but you're not going to get in at a cheaper price. But you can still have a strategy with the 5 minute. I'm not cutting it down, but I always hated it when people would bash me for trading the 1 minute. See here on the 5 minute, we had 2 engulfing candles with an inverted hammer and this tweezer bottom, so that would have been a good entry to run it up to a double top and get out of that trade. Then you had a tweezer top, you have a tweezer bottom with a hammer. So I mean, you can still trade with a 5 minute, and sometimes it's a little bit cleaner, but you're not going to have those chart patterns like you do on a 1 minute. You more or less have to rely on candlesticks. Okay, I'm gonna go make me some lunch. Hope I'm a little help.
Real time. Opening bell live at the NYSE right where it counts. Believe me, when it comes to investing, you'll love Carl's way. Take a left here, please.
Jimmy's feeling insecure again.
Is it?
Carl's way is the best way.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
God, you're hard on Carl.
Schwab.
Shame on you.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Hayden. It's time for the big
Welcome
three.
back
We've
to
got
Trading
three stocks,
360.
and 3 trades. Rick Ducat will take us through the charts as always. Here to
There's
take
a
us
lot
through
of
the
big
trades
sell-offs
is
today.
Dan Deming, managing partner at KKM Financial. Thank you both for being with us. Dan, great to see you. We finally got this Fed rate cut decision. Markets a bit mixed today. I'd love to get your thoughts on the decision we got yesterday and the response that we're seeing today, in conjunction with Oracle's earnings.
Yeah, I mean, Oracle's weighing on this market, Marley, overall, but, there's still some indecision here as we are basically near or at all-time highs. Now, what is interesting is you're seeing that seasonality unfold once again this year with the Russell continuing to maintain upside momentum. Certainly the small caps appear to be benefiting from the rate cut and the perception that potentially rates are going to continue to move lower. But also seasonality is working its way through the market. So we're seeing what would be considered, I think, to some degree a normal December, particularly when you look at the small caps. But the other parts of the market, certainly valuations are still being called into question. Broadening of the rally, though, and you and I have talked about this over the last month, that rotation continues under this market. So even though we're not necessarily breaking out to new highs, it does appear that there's a broadening of the strength in this market. So eventually I do think that we will see new highs, even if it's not the big names leading us to those levels.
All right, and for big three, we do have one big name, but this first one's not quite as big. Let's talk about 3M here. They're having a good year. They're up 30% year to date, a little more than that. Walk us through this first pick.
Yeah, I mean, again, a name that is in the industrial complex, but at the same time has exposure to semiconductor materials and data center solutions. So it does have its tentacles into the areas that are perceived to be continuing to grow rapidly. So I think that that's a reason why the stock has benefited overall this year. And again, with some hesitation here, but I think, when you look at the price action, there's the potential here over the next month, short-dated trade example today in January to capture a move back towards those recent highs, which are right around, 173, 174.
Yeah, recent highs for 3M right around there. Right now, 169.22 for 3M. So, Rick, as we take a look at the technical setup for 3M, they have had some strong performance moving generally to the upside. What do the technicals show us?
Yeah, so closing high was around 173, intraday high just shy of 175. So this is an area where price has had some trouble staying above this repeated ceiling that we've bumped into a few times here after we initially hit intraday highs just below 173 back here after earnings in October. So now though what we have is kind of this zigzagging activity here where we are bouncing around in between some various support levels in tandem with our resisted ceiling here. So one level to the downside, 159.50, that was about where we had our intraday highs. Then you can see that this was a repeated stopping point for price many times leading up to our big rally from earnings last time here. After that, 163 was around where we saw our more short-term floor here. So that was where we held on near our relative lows last time that we saw from early November. However, our upward sloping trend line here in blue has been broken. We did pull back to that supportive level after our break downward here. So now it remains to be seen if the bulls can reestablish some directionality here and retake those highs and continue the trend to the upside. 21-day exponential moving average comes in right about where we are now. Price is crossing above that today. It comes in at 167.64 at this time. One thing to consider as well, RSI still trending downward. We had our brief foray into that overbought area, but from there you could connect these highs pointing downward here, showing a little bit of bearish divergence. Price was rising, RSI was trending lower, suggesting the pace of the gains is slowing down. Doesn't necessarily mean a collapse is coming here, just that perhaps this is the consolidation phase before the next leg up, or it could be the site of a further breakdown here. Look for a directional breakout to give you some clues in which way things are materializing here. Volume nodes, we can see one right here, right about where we are now, near 170. Things really start to thin out beyond that. Our point of control, our heavy volume area, all the way down here near 152. So a pretty significant gap between those two levels here. Seems like there's some potentially staying power here at these levels near 165, 170.
All right, so we just saw Rick highlight those levels around 165, 170. Dan, when you were looking to potentially trade this one, did those levels come into play?
They do. And in today's trade example is something that I think that, this is a longer term hold, I believe. So today's trade example is a buy right. So basically buying the stock and then selling the January 175 call. At 168, you could do that around $2.85 to that call. So it gives you a nice capture zone to the upside, actually a little bit of a breakout above that 175 level at that point. If we do get there in January, then you have the decision, do you just want to close the position out and take the gain, or to roll that call further out. But at the same time, again, the zone, as Rick pointed out, is this 165 to 170 level. And even if we see a little weakness on the 163, this still gives you a break even down around that 165 level. So I think, again, the lowers the break even, gives you a nice upside capture zone, and then the decision to make in January if we do see a breakout to the upside.
All right, and then your next pick is the big name that I hinted at. You've got Alphabet here in the big three. We are seeing Alphabet under some pressure today, along with pretty much all of the other tech stocks in the wake of Oracle. Trading down close to 2% right now. Walk us through this pick.
Yeah, it is down. We're finding a range here around the 315 level, and I think that overall, as we continue to see the evolution of this market and going into January, it appears to me that Alphabet's in a position to probably regain its footing more so than some of the other big tech names and participate and challenge the recent highs. And if that's the case, then today's trade example tries to capture that by defining risk to the downside, but capturing this risk, the zone, I should say, back to the recent highs.
All right, Rick, so as we take a look, we can see clearly we are off of those recent highs, but what are the technicals telling us?
Kind of an interesting setup here. We had a rising wedge type of price pattern here, rather narrow, rather steep, typically regarded as being more of a bearish type of pattern here. But really, as always, there's no guarantee with any of that stuff. It's going to go either way depending on the direction of the breakout beyond either of those two boundaries. That's what you'd be looking for. In this case, we did have an upside breakout here. So we had an even more strong move to the upside after our climb here. So we topped out right around here near 329, just below that mark here. We can see as well now we have a pattern developing. Could be kind of a bull flagged, bull pennant type of shape here, where we have a sharp rally, we have a brief sideways to downward consolidation phase that pulls back to a supportive point, and then the trend continues here. So that's a setup that many traders might be on the lookout for. The question is, did we already hit the supportive lows? Did we already bottom out during this brief downward pullback here that didn't even close the gap or anything like that at this point? So that's the question here. But at 329 would be the breakout point to the upside if price starts to take out those old highs. Our 21-day moving exponential moving average here in yellow is roughly in line with some of those old highs that we saw previously. That comes in at around 307. You can also see this range-bound consolidated area here between about 275 to 292. That could be another area of interest to the downside if things do start to give back some of these gains here. RSI compressing in a triangular shape here, two trend lines converging toward each other. But however, we are breaking out to the downside from this one. Despite our many crossovers into that overbought area,
squeezing.
We are starting to wane a little bit here. But we have not made relative lows yet. So kind of a question mark, still not really giving us a strong directional clue just yet here.
Rising wedge.
Down below that level, and for RSI to break
divergence
at the same time. volume nodes, we can see right about here, we have one near 285 or so that lines up with that area we were just discussing there. But more importantly, right about here, near
Now notice the pullback on Google
15 or
today.
so, this is another of those relatively larger volume nodes at these high levels, suggest.
So we got a setup right now for a day trade on Google. Inverse head and shoulders. I'm going to take you to three different time frames. The weekly, it's had one heck of a breakout. And we got a long ways to go to hit the 9. So that's still looking bullish. So we got a gap. We got a gap on the weekly. So support to hold would be right here. Right on the body of that candle. So that's where you want to put a price line. Right on the body of that candle. And then set an alert just right above it. And type in gap, top of gap. Set it at the mark at below. Type in gap play, top of gap. And create your alert. And then you want to go to the daily. And we might have hit that already. Let me see here on the 1 minute. Not yet. Pretty close. So we could have one more little sell-off. Then you want to go to the daily. And same thing on the daily, gap play. So you're going to fill this in with a color. And then you want to put a trend line, price line here on the bottom of the gap on the daily. And you want to go to the hour. You got a head and shoulders. So you want to take a trend line. Go to that body right there. And take it to that body. So it could pull back. You hit it right here. You hit the trend line right there. You almost hit it right there. So that anywhere under 310 would be a swing trade. And then you want to run a straight price line from here to there, and then you got a two-headed snake. So we're at a support for a day trade. Then you go to the 5 minute. See how close you were on the 5 minute? You got a head and shoulders right here. So this is a descending flag. This is bearish. So I'd wait for it to pull back and see if you do a double bottom. I don't know if I'd trade it. Piper Sandler maintains overweight on Google, raises price target to $365. Regetta's a buy for Quantum for a swing. But that's in Barron's, and I don't trust Barron's as far as I can throw them. Okay, we're getting ready for SPX again. These things dipped down to 360. I'm going to stick with them. The 68.75s. We're at the shoulder line. Jimmy said the third time. $68.75s at 360. Inverse head and shoulder, the head and shoulder triple bottom on the right shoulder. Hammer on the third crow. There's your scalp right there. 360 to 530. In and out. Boom. How's he do it?
If we look at the core growth opportunities, there are a couple.
Adobe.
It's the bringing Acrobat and Express to billions of users. This is the combination of productivity, everyday tools in terms of consumption, editing, and creation, all in one unified ecosystem. From a creator and creative standpoint, it's the flagship solutions that we have with Creative Cloud, Photoshop, Illustrator, etc., as well as newer solutions like Firefly, and all in one stop shop for ideation and
I have no
creation.
clue what Firefly
And that also
means.
dovetails into the marketing professionals ecosystem, where at the highest level, what we're doing is bringing a content supply chain together to go from content creation to production, delivery, and activation, connecting the ecosystem in a way that's never been done before. So
What a
across those
presentation.
strategic initiatives, we're seeing great progress, and this is what's going to continue to fuel growth for the company.
And part of that progress is that the AI-influenced ARR now represents more than a third of Adobe's business. How quickly is that portion growing, and what does it mean for long-term revenue visibility?
What a great question.
It's tremendous progress to see AI influence representing over a third of our overall business. Now, to be clear, that is going to grow to 100% over time. Every dollar of subscription and business that we drive will be influenced by AI, and that's really the trend that we're trying to highlight here. We're deeply and natively integrating AI into existing solutions, bringing new AI-first capabilities to market, and this is captured in the form, and I'll just mention a couple here, but it's the Firefly app, it's Firefly Services and Foundry for content automation, it's assistant and agentic capabilities throughout both creative solutions, but also marketing capabilities. So over time, those lines are blurring to the point where every one of our capabilities, and therefore every dollar, is going to be enhanced and therefore influenced by the presence of AI.
You
It
think
makes
so?
a better customer experience, it creates a better return on investment, and it's a more delightful experience.
He's a smart guy. This
And
guy
while we're
is.
talking AI, I have to bring up one of the headlines I saw pop up most when I was preparing for our interview. Of course, this ChatGPT integration with some of your products, Photoshop, Acrobat, Express. What's the strategic goal here? Is it new users, engagement, or is it continuing to cement your role in the AI ecosystem?
It is to meet users
Marley.
where they are and make sure that they have access to the best capabilities
Gosh, he's good.
and experiences. And we have a pretty fundamental view that the intersection of conversational workflows and engagements combined with the power and precision of tool-based applications is really the future forward. So it's the combination of both, not one or the other. And that's what you've seen us develop and introduce within our own solutions, and also meet users where they are. And certainly addressing over 800 million weekly active users and making sure that they get the best of what Adobe can offer is a benefit to those users. I'd also make another point, which is to say, in a world where there's a lot of choice in terms of model, aesthetics, and tools, bringing that all together to give customers flexibility, choice, and access is key to our strategy. So you see that both in terms of us building and developing a model ecosystem that's extensive, features our first-party models as well as third-party models, but also meeting customers again where they
SPX
are
is now at
through
680.
integrations with ChatGPT and partnerships with other companies like Google as an example.
And Doug, before we say goodbye,
Double
I
top.
want to talk about your recent acquisition. This was the first quarter since announcing that SEMrush acquisition. How does SEO fit alongside creative, marketing, and document clouds in Adobe's long-term strategy?
You bet. It is.
IWM new high.
Addresses the desire for brands to be visible in the modern age, both on traditional search engine as well as LLMs and generalized engine optimization. So it complements our existing portfolio, which is intended to bring additional brand visibility and help customers and enterprises solve those problems. And this creates a much more comprehensive solution that allows companies to have visibility into owned assets as well as other assets.
This guy's
like
good.
Search engines and LLMs. So it rounds out the portfolio, very strategic. We're excited to bring it to market, and looking for that deal to close in the first
He's the CEO of this company.
Adobe shares trading up about 0.75% on the heels of this earnings report. Doug, thank you for taking the time to be with us on Trading 360 today. That's Doug Clark, the Vice President, Investor Relations at Adobe. Coming up next, we're going to take a look at the financial sector and the bullish
I like this guy. He's smart.
Okay, that's next on Trading 360.
I really like him a lot. I mean,
The Schwab Network. Tune in 24 hours.
he's a good speaker. I'm impressed. I don't understand a word he said, but I liked it. Marley, it was a great interview, baby. What are you doing tonight? Would you like to come over and have some coffee? We have a fallen wedge, spelunk, spelink, on Adobe, yeah, spelunk, spelink.
Hey, Tony, thanks for being with us. You know, you brought some picks today in the financials space. Let's talk about this first one, Truist Financial. Walk us through your thesis on this.
Yeah, so if you look at the stock chart first, the stock has really been sort of range bound in quite some time between 41, 42, and on the upside around 46, 47.
What one?
And just in the last couple of weeks, the stock started to break out here to the upside.
What stock?
Especially as financial started to, outperform
TFC?
with the expectation of lower interest rates that was delivered yesterday, a slightly less hawkish cut than we were expecting, and that's been a tailwind for financials. Now that we've broken out to this new 52-week high, this is really where I think that investors can potentially start looking at this stock, for further upside.
Oh, no.
The stock the whole year, but
Don't say
from
that.
a valuation perspective, but it's really now that I think the timing makes sense. We got the breakout, we got the outperformance that, from a timing perspective, it makes sense to potentially
Don't
get
say
off
that.
this particular stock because, out of the regional banks, it's definitely the one that looks most attractive from a valuation perspective. It's effectively trading at tangible book value, versus most of the other ones are trading significantly higher, around 20 to 25% higher in terms of valuations. And it's expected to grow fairly quickly. We're expecting EPS growth coming in around 12, 13% year over year, revenue growth in the 17, 18% range year over year. So, a fast growing regional bank, commercial real estate exposure, relatively light, and an interest rate environment that's potentially favorable for the bank.
And as far as this regional bank, do they have any exposures that you think make them more attractive than some of the other regionals, in addition to just it being potentially undervalued or fair value right now?
They're now at $10. The 68.75s.
Exposure side, they are fairly light, and I think that is a net positive for. I think there's a lot of regional banks that are currently being weighed down by commercial real estate. Truist Financial, has some exposure.
Sorry, no soup for you. We want you to pick a stock that's at support, not at resistance. For that, you get an F. Oh, look at this. Ladies and gentlemen, we are now at 1050. What did you see up here that I see? That's correct. Double top resistance. Yippee-yay. $3.60 right here. I did it again. They're now at 1080. They were at 11 something. The crowd's going wild. So let's talk about this trade. I love talking about trades. We're going to get rid of this. Remove. It's down here. But we have a double top. So what happens when you have a double top? What's that mean? If you go into Google, or let's ask Brave double top. A double top and double bottom are reversal chart patterns observed in technical analysis with Washboardjim, who teaches the sneaky snake trading strategy, where he talks about chart patterns, moving averages, and being in the now. It forms when the stock reaches a resistance level twice. That's called a double top. If it hit it 3 times, it'd be a triple top. It would not be a double top. It creates an M-like pattern. Want 'em? 2 bits. They're now $12. $12.30, $12.50. Woo! So we got to go back a ways. I don't know, man. I feel like I got to get out of that last one there. Oh, this looks like an exit idea for sure. Right there, 68, 80, 76. Two-headed snake. How's he do it? Man, it takes a lot of practice. He's all out at $12.80. Okay, I'm going to drink a glass of water, yawn, and I'll be right back. Chart patterns, moving averages, and on the 5-minute, it's a double bottom, double top. Tweezer top, inverted hammer, What's that mean? You're right. 3 white soldiers on the 5-minute. Another reason to get out of the trade. 3 white soldiers with a double top and an inverted hammer.
To $68 billion just for the last quarter, and a stunning 433% increase over last year. And so this is tie into the fact that they're just gaining new deals. That is with players like Meta and NVIDIA, as well as their ongoing relationship with OpenAI. And to underline this record-breaking RPOs, the fact that their top line over the next 12 months will reflect that 43% of the RPO will be implemented during 2026. So that's $225 billion that's built in, offsetting, I would say, significantly the $50 billion or so that they've had to plan into their CapEx. So this, I think, is demonstrating that Oracle is really in a solid position overall, certainly over the next calendar year.
And Robert, I have a feeling this conversation might get interesting here based on the notes that you sent over. You know, you've argued that Oracle is blowing air into the bubble, taking on any RPO deal that it can get. Do you believe that this RPO surge is more of a red flag than a revenue lifeline?
Let's go back in history here really briefly. Starting just a couple of years ago, Google and Microsoft were the first to start ramping their CapEx. The market began rewarding them very quickly for that because they saw them as early movers in AI. Meta, who was a little bit late to the party, came in and said, we need to play catch up, and they doubled their CapEx last year, and they're now, third head in the race. Oracle's coming in last to this party. Are we really going to believe that the last guy to the party who's ramping their CapEx without an incredible advertising model to support it? What's so wild about what Oracle is doing is their core business is not financing this thing. They're financing it with debt. And these RPOs, more than 75% of them start in 24 months. As an investor that's asking me to take risk on this thing, it just seems asinine to ask me to be an equity investor in someone that is leveraging up a core business that can't afford the outlays that they're currently putting out. So I'd love to understand for the shareholders that are long this thing, how are they comfortable with how management is spending this kind of money right now?
Ron, perhaps you can answer that since you think it is a good long-term play.
I love this controversy, this discussion. Yeah, I think I underlined it. I think there's the fact that 43% of the RPO will be implemented in 2026. That's my understanding. And so, yeah, there could be a debate about how much of that will actually be implemented in 26 alone. So we're looking at beyond 26, okay, there's more RPO to anticipate. And as a result, I think this is going to give Oracle that ability to meet their strategic goals, both in terms of their business strategy as well as financials. I like to spotlight specifically their OCI business, and that increased 66% year over year.
That's
and
right.
The fact that when it comes to GPU-related cloud revenue, that increased by 177%. So this, I think, is offsetting, that debt concern and about...
You're so right, mister. So as Jim gets ready to look at the chart that he just exited the double top out of, he goes to the 1 minute. As an educational instructor, I must say to myself, if we hold the orb here and break out to the upside, could we have a new high? That's the question I must ask myself. If not, we have to hold this support level or we become bearish, and which we did. Now we've hit the 63, which is a secondary support level. Uh-oh! Jim, you were right about exiting and trade. I know it. I can't help myself. They're now at 570. What are you going to do? Does anybody see the reason? The next support level here? I'm going to give you 3 seconds. 1 of us, 2 bits, freebie. Correct. It's called the inverse head and shoulders. So we're going to draw a trend line from the body of that candle to the problem. From that trend line to that right there. And we're going to wait for that sucker to hit that. Then I'm going to jump in and I'm going to buy these calls. Do you have a problem? Get your mouse ready. I'm head over heels with the Head and Shoulders. Let's touch it now. Let's touch it now. I'm in heel and love with inverse Head and Shoulders. Let's touch it now. Let's touch it now. It's a 6875. Calls keep it alive. Get ready. We just hit the right shoulder, the inverse Head and Shoulders. $4.70. Come on, give me 50. Right about now. Ooh, Lordy. Lordy, 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 Lordy. Inverse Head and Shoulders. Okay. SPX, there's the hammer. $4.60. The Head and Shoulders. Thank you very much. He's back in it. He's back in it. He's back in it. I'm in love with the inverse Head and Shoulders. Look at me now. Look at me now. I'm up $60 a contract. Look at me now. Look at me now. We're at 540 from 460 head and shoulders. Look at me now. Look at me now. It's the singing day trader. I'm up $100 contract. Up $100 contract. If you're new to trading, you know what to do. Take your profit. It's up $200 contract. It's up $200 contract. Within 3 minutes or 5 minutes, I made $400. Get out. Get out. 460, baby. Boom. I've never seen anything like it. This man is nuts. You want to say it again, Chris? Woo! How does he do it? He winks his eye at every chick. They stop in their tracks and they wiggle their hips. Beautiful. Head and shoulders to the 63 or the 200 SMA. How in the hell does he do it? watching the streetcars as they walk by. Oh, my friend, a beer. I'm so glad you're here. Okay. Okie dokie.
Today, you saw jobless claims moving above 230,000 for the most recent week. But then the week before, there's the argument that that's a holiday week. So, you know, it begs the question of where do we go from here? A couple of the things that stood out to me from what Powell said, Tom, were he said, quote, we are well positioned to wait to see how the economy evolves. But he also talked about that dissent, right? That, you know, kind of the divides between the lines there, that there were some who essentially felt that we should stop here. He said, quote, what you see is some people feel we should stop
What you
here.
see is what you get.
In the right place, and we should just wait. We saw that. Obviously, there were two on that camp. And then there was the side, as you mentioned, Tom, earlier, of the jumbo cut. So it feels like there's still some mystery around.
Oh, God, you bring Tom in for the mystery? This guy's been nothing but depressing, Diane.
Yeah, I think it just goes back to what I stated earlier, confusion.
Oh, you're confusing.
You know, these dissensions.
You're on a roll.
You know, basically focused more on inflation. It seems like the Fed now,
seems like you're
is
full
more
of shit.
focused on inflation at this 3% level for CPI, lack of data, you know, withstanding. But then again, they weren't as worried about inflation back when CPI was 9%. They
Exactly.
keep harping on this.
Exactly.
When you look at the jobs data that we're getting, you know, that's slowly coming out. We understand the job market.
I said the same thing. We had the highest inflation of my lifetime during the Biden years, but they didn't seem one bit concerned about it. They did not. I mean, you used to listen to me complain about how much my trash bags went up and how much my chicken was. 5 chicken breasts were at $32. I'm going, you got to be kidding me. Chicken breast halves, you know. Everything was up. Tomato, $3.49 a pound. They were up like $1.50 from when I used to buy them just a year ago. And then we run out of tampons and diapers and toilet paper. I'd walk through the store and some of the shelves were completely empty, but they didn't care. Now all of a sudden they just have this thing for inflation, and I don't, it's annoying if you pay attention to that kind of stuff. $8.30. Look at there. Boom. Another wonderful call, but I didn't stay in that one. So both of them at $6.60, $400 just to prove a point. He's right. I have to say Tim's right on that one, or Tom, or whatever his name is. Bald Eagle. I just think I think they're using it as an excuse to bring down this market that's up so much. They don't want Trump to win. They don't. And I'm not the one that trusts fake news in a way. You know, Livid Goose mentioned the VWAP on the SPX when I traded it earlier. Look at that. It almost came down and hit it again. And look at that. You see what, you know what that is? Can anybody tell me what that is? On the slashy yes. That's a doji.
Maybe a resetting of the valuation of this stock is necessary at this point until maybe they see some of these deals, which a lot of them
$10
come online until the end of next year into 2027 also. So I think that's part of the concern, and that's why you're seeing price target cuts across the board, where this stock's getting re-rated, where that move up to 345 in September was just an aberration at this point. But we'll continue to watch this story because they did book new events and new deals with the existing clients that they had. So that's a bonus for them moving forward. But I think the debt situation, and the CapEx situation is a concern for investors at this point.
Okay, let's talk Eli Lilly, you guys. Successful shot for this company, sending those shares higher after word that those trials for his triple G weight loss. I'm going to go slow with the actual name of this drug, retatrutide. As their next-gen weight loss drug, it led to patients losing about a quarter of their body weight over the course of a little more than a year. And from what I've read on this, they said that some of it
That hurt.
worked almost too well. Listen, I don't have a problem with
12
more
bucks.
weight than expected.
I mean,
Tom,
$12.60.
on this one, what's your take?
Yeah, it's more, positive news. It seems like, since Novo Nordisk, which was the leader in this weight loss drug injection, GLP-1, theme that's going on here, they were the clear leader, a couple of years ago. Now, it seems like Eli Lilly has ramped up the innovation within this space relatively quickly, and that's a concern for the competitors like Novo Nordisk. But if you start taking a look at the innovations that they're making, whether it's this, this study that they have results on, they're going to get more in 2026, more results, because they have a few more of these phase 3 trials going on. But then they're going to come out with the oral pill that's also probably going to be, more desired at this point, because a lot of people don't like to take the shots. But you see Eli Lilly just off of those record highs, and they continue to innovate in this space. They just announced that they're building another $6 billion facility down south that's going to help them because the demand is still there. And they continue to beat back, competitors in this space.
Yeah, they're expected to be the leader, especially given the expectation for how much market share they'll have by 2030. Kevin, what's your take when you look across this? It looks like Eli Lilly has taken the ball and run with it.
Yeah, this is an interesting report put out today, and I understand why the stock is higher. 28.7% weight loss, up as much as 71.2 pounds over 68 weeks. And, oh, by the way, it also helped with knee pain and cardiovascular risk markers. So, I mean, I would call this, I'm glad you had to pronounce the name of it, Diane, and not me, because it sounds like to me like the fountain of youth. It seems to be correcting weight, it seems to be correcting knee pain, cardiovascular. I mean, I don't know what the other shoe to drop is, but wow, this thing, I mean, there's a reason the stock is rallying so much. That is, you get people who are overweight, and it all seems to be
come
like
close to hitting my support yesterday.
Drug seems to do a large amount of good for people's overall health, and yeah, I understand.
Here's another one.
Looking at
This is another one about Wall Street. When this hit an all-time high, they pumped this up to $1,400 when it was up here. And I said no. And look, and I didn't even watch it. And it come real close to hitting my support. I probably set an alert and didn't check it out. It probably went off. But I charted this one up seriously. But here's another example of, don't ever chase them all-time highs when they pump them up ridiculous prices like $1,400. Let me see if it's still, headline's still in here. We got 1,200 here. I remember 1,400 or something. When was this? This was on 11/26. It only goes back to 25. Oh, okay, well. I can't find it. Man, I wish I'd stayed in that one. 1350 now. Whoop. Look at Adobe broke out. Jim called the wedge. Damn. Oh my God. Oh. Jim, do you know that would have been $3,000 contract? $3,000 with 2 contracts? Did you know that? Instead of making $400, Jim, you could have made $3,000. Woo-wee. Oh, well. I'm pulling my hair out. Oh boy. That makes me want to cry.
Buy one of the 390 puts, sell 2 of the 385 puts, and then buy 1 of the 365 puts. It's risk defined. You're collecting a credit. It was trading 330 earlier. It's trading about 280 right now because, as Kevin mentioned, the stock's moved higher on this one. But the credit you collect is
I'm going to take a little break.
This trade, that's above the 390 strike. You just get to keep that credit that you collect on it, whether it's $3.30 or $330 or the 280.
I didn't see that coming.
Trading. But it also takes a break-even cap down to 376.
I saw the support, but I didn't see that.
On this one, if you can collect 330. So plenty of room to the downside on this, but you got a little kicker here, Cab. At or near that short strike. So this stock can go down. You just don't want it to go down maybe more than that 1 standard deviation on this one. But you've got a little bit more risk on this one also, Kevin. You've got roughly about $1,300 in risk to the downside, but that's all the way below the 365 level at this point, Kev.
Yeah, it's a put butterfly, but it's long deltas, right? And so you'd prefer that the stock either goes down just a little bit towards that 385 strike or higher, right? This is one of those trades that we talk about a lot where if nothing happens, you're profitable. If the stock just stays right here. What you don't want is a big sell-off on the downside. When it goes lower than that 385 strike, you get to move towards where your risk is. The risk, the difference between 385 and 365, that's $20 minus the $5 minus the 280. So that's about, or 330. So that's about 880. So you've got about $1,200 in risk on this trade when it's all said and done. If you go to the worst case scenario, but this is one of those trades where you're looking for nothing to happen or slightly higher. That works for us, Tom.
Yeah, that is a good point. If you collect over $3, it's going to be about $1,200 in risk on that one, on this trade. But there you go, Diane. Both passive trades, but still taking a directional bias. Kevin's a little bit more bearish, mine a little bit more passively bullish.
This is the triple B segment with a neutral tilt to it. Neutral to bearish on one side, neutral to bullish on the other side for Broadcom. Thanks, guys. We've got cash tags coming up. The team from Lightfolio will be along with new sentiment data on Lululemon. That stock's been stuck in downward dog all year. Stay right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane.
And I'm his mom. Sometimes, you could have done better.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the SIBO. Time now for our cash tag segment. We are taking a look at Lululemon. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio. All right, Landon, I took a look at your charts, right? And I know we'll be showing those shortly. I'm not surprised who's at the top of the list, but I am surprised to see the momentum in Lululemon, especially given share performance this year. So take us through some of your data.
Yeah, I mean, I tell you what, Lulu has been just getting their butt kicked. And the stock was, what, 420 or something like that a year ago. It got down as low as 160, and now I think it's, what, 185. So it's just been on a downward spiral, moving really largely on each earnings report. Most of the downside has been cut in half over the last year. And, you know, we've generally been talking about how it's struggling to, you know, lose market share to Viore, Alo Yoga, and some of these others who are kind of up-and-comers. And Lulu, for a long time, was at the top of a lot of our lists, but over the last year, they've really fallen off. In fact, when you look at what they were doing last quarter, their web data, the consumer demand data, was negative 5% on a year-over-year basis. That's last quarter. That's when the stock dropped about 20% on earnings. Now they're at plus 44%. Again, this is a lower bar. That's a really important thing for people to realize, is that we're measuring this versus a year ago. So, you know, they've struggled, but since the lower bar's there, now they're in this plus 44 column where they were negative 5. And that's an incredible turnaround in just one quarter. We don't see that kind of move very often. And I think really what's happened is, when you look at the stock, you look at what happened last quarter, they actually beat, but they lowered expectations, they revised confidence, they pulled everything back and said, basically, this is going to be a rough year for us. They're talking about revenue declines for 1 to 2% in the future. They're talking about tariffs, how they're pressuring margins, and we need to do a brand refresh, and they're doing all of these things, but it was a fairly negative outlook on the last quarter, and so of course the stock has sold off. It's gotten beaten up tremendously, but now you can see here on this chart, it's wild to see how strong this holiday season shopping has been for Lulu. It's up significantly. It's moving higher at a much faster pace than normal. It's higher than it was, and it's moving higher faster. And so I think this is going to take a lot of Wall Street by surprise. I didn't expect to see this kind of data, but when we saw it, it was very interesting because, again, you go from last quarter at -5 to this quarter at +44. That is a monster move, and with the stock as beaten down as it is, I think that we're ripe for a bit of a surprise to the upside. I think that the company's doing better than investors think. I think it's doing better than management would have thought it would have done over the last 3 months. So obviously you can tell we're pretty bullish going into this one, and it's largely due to where the stock is at right now. I mean, the stock being sold off so much over the last year, last quarter even, really sets things up for a nice surprise to the upside. Plus, they've got a lot of good things going for them, right? I mean, they're talking about how they've gotten too predictable with casual, but their performance stuff like yoga and running and training, golf and tennis, those have done well. So they're going to start introducing more styles, and so the turnover rate is going to go from about 23% to 35% this spring. So people are going to see a lot more things coming out from Lulu. It's going to be more interesting, more fresh, and more reasons to go in and shop. So I think that they're doing some things that are getting attention. On the other side, we've got China is doing well. It's kind of a bright spot for them. The revenue is up significantly. Their comps are up pretty strong. They've got good growth there. But I think the U.S. is where most investors are looking at that performance, and we're seeing good turnaround in that performance. So again, this is one of those that stock's been beaten up, and you would expect numbers like flat or maybe negative a few percent on that demand curve, but we're seeing plus 44%, and I don't think that a lot of investors are ready for that. So we're going to position ourselves for a big move to the upside.
You know, Landon, when you look at the chart of their stock, you thought this segment would be entitled Applied Tourniquet to what was going on there. And the numbers have softened. The growth has decelerated a bit. But what you're talking, and this is where like Folio's data is its most important and most, the biggest driver is you're seeing a big, almost a 180-degree divergence from what you saw before. And for them to pull ahead of Viore and only trailing Aloe, which is an extremely popular brand, but you're talking about brand fatigue being over and them getting back in the game here. This is a big news for a stock that has come straight down over the last year, Landon. I mean, do you think that this can really be the surprise that your data says it is?
I do think that, and again, this is, you've got these, for forever we talked about Lulu on the show every quarter, and it was always Viore at the top, and Aloe Yoga I think was second, and Lulu, was kind of hanging around Nike usually, right? And we always talked about how these up and coming brands of Viore and Aloe Yoga were kind of threatening, but they're still kind of small. That was the narrative a year or two ago, and now it's like, well, they're actually making some inroads here, and Lulu's getting irrelevant. I think that was the story over the last couple of quarters, and now it's basically we're saying, not so fast. Like Lulu's not done here. They're making a bit of a comeback. And there's tremendously positive consumer sentiment and consumer demand that we're seeing in our data. And I just don't think a lot of people are expecting it. And what's really interesting is if you look at the last 4 earnings moves, I think over the Monday to Friday period, they were 16%, 18%, 13%, and 20%. This thing moves really big. And right now, I believe it's got about an 11% market maker move priced in. So I think that I think it's worth the risk reward is worth a bet to the upside in an aggressive way, because I think that it's likely to move more than people think, and I think it's likely to surprise people to the upside just based on the data that we're seeing.
Okay, I hear you with the data you're seeing, and I'm not usually skeptical on it because your data's been very strong. But Lululemon, again, I've made this point before, Landon. When I look around, like for instance, New York, and I know New York is it's one city, but it is one big city. I see aloe everywhere. That's what people are wearing. And then when I think about trends, even for this holiday season, like my nephew who's 16, and I know like Lululemon has men's section, but the things he asked for in sportswear, there was no Lululemon on this list. Quarter zips are in, apparently, with the teenagers, which is interesting to see because it's like professional wear. Nike's out, apparently. Or I shouldn't say Nike's out, no disparaging Nike, but like that's the thing, right? So I haven't seen Lululemon register as much. So, you know, to your point, maybe it's early, but maybe it's a 2026 thing. That's what I wonder, because, you know, this is the holiday season. We should be hearing great things about, you know, about it if it's doing really well. Is there anything that shows, and maybe this is a 2026 story? Landon?
Yeah, so I'll soften just a bit, okay? Let me just soften just a bit, and it goes back to, again, how the numbers are calculated, because it's all about what we're doing now versus last year. So Vuori at plus 23% and Lulu at plus 44. That seems like Lulu's kicking their butt, but again, Vuori's been on a race higher, right? And so for them to continue growing is remarkable, because their denominator in that fraction is very, very high. So Lulu's denominator is very low. It's easier for them to beat. So I think the story is, it's kind of a we're not dead yet sort of story, right? If you look at the stock price, it has just been decimated pretty much every quarter, and it continues to go down. A little bit of a bounce since the lows of around 160 up to whatever it is, 185 right now. But I think that the sentiment on the street, on Wall Street, is so negative and so expecting of bad numbers that anything to the upside is going to be a pleasant surprise, and I don't think it's priced in. So yes, I agree. Those other brands are gangbusters, and they're coming along, and everybody wants them. And I think that Lulu is being counted out a little bit prematurely. I think that, yes, they have obviously struggled over the last year. Our data's turned bearish on them over the last few quarters, but now for the first time it's turning bullish. And again, a lot of it has to do with how well they're doing now versus how well they were doing, and they were doing terrible. So plus 44 is better than terrible, and I think that that's what investors are going to hear is, oh, maybe this stock is turning around. And yes, the competition is still very strong. These up and comers are still, kicking butt. But Lulu is still going to, hold their own and do this brand refresh in 2026 by spring. And I think a lot of positivity is going to come into that. So yes, it's a little bit of a 2026 play, but I also think the sales numbers from this holiday season are going to give people the optimism, and maybe management the optimism, to talk about how positive 2026 can be. Because just like they talked in last quarter, how negative they were, and how much they lowered guidance and all of that, stock got crushed 20%. I think they may have, if our data is correct, they may have the opportunity to tell the opposite story and talk positively about the next few quarters, and that could really get investors excited.
Stock out of downward dog. All right, that is Landon Swan, co-founder of Likefolio. Thank you, Landon. Appreciate it. Now for the trading perspective on all things Lululemon, let's bring Tom back into this conversation. You've got great insights from the Likefolio team. Final thought from you, Tom, before you guys get into the example trade.
Yeah, we haven't seen their data this positive. I haven't heard Landon talk about Lululemon like that in probably a couple of years. So pretty positive data out of them. The bar is really low on this one. But remember, you guys mentioned the 2026 story. It might be that they don't expect North American business, which is a majority of their profitability, to start kicking in until 2026. So maybe the bar is low for a reason. But they've got positive data. Landon mentioned the option market pricing in, Kevin, about a plus or minus 11% move in the shares. So implied volatility levels elevated in the near term. How do you want to look at this one from an example trade?
Yeah, I admit to being surprised positively by Likefolio's data and how strong it is. And with this stock down, how low it's sold off, how low the PE is, and how low the bar is for earnings. Yeah, it's making me look at something in the bullish camp here, at least for a paper money trade. So what I did kept very short duration on this trade. Went out to December 19th, bought the 185 call, so basically at the money. And then I went out to just this week, December 12th, sold the 205 call time. So right in line with the expected move of about $20. 185, 205, 1 week call diagonal. I put that in for about $8.20, trading about $8.10 now, Tom. So something around or just over $8 on this call diagonal. It's a $20 call diagonal, Tom.
it sets up, I'll break this one down, it sets up with Lifefolio's data that's bullish also on your example trade, but let's break this one down. December 19th, monthly options that expire in 8 days, buy that at the money 185 strike call, and then in the near term, December 12th, weekly options that expire in just 1 day, sell the 205 call. $20 wide bullish call diagonal, you're paying roughly about $820 debit. The debit you pay is going to be your risk, $820 per spread. But as you can see, it's a $20 wide bullish call diagonal that you're paying less than half the width of that diagonal, and that's due to that vol dispersion we talk about, higher implied volatility in the options you're selling. On this one, you're selling about a 251% implied volatility in the December 12th weekly options where you're selling that 205 strike call on aggregate and then buying about 109% implied volatility. That lowers that entry point price. You can see here from the risk profile, apex of profitability at or near that 205 strike. But anything probably above about 189, 190 is going to be potential profitability on this one. So on a percentage basis, you don't need that big of a move, but because you're paying less than half the width of it, anything above about 190 bucks is going to be profitability. On this bullish trade, Diane, that sets up exactly what Lifefolio is stating.
All right, we'll be watching that one, especially given the results due after the bell. That is certainly a way that investors and traders could look at this one. Thanks, guys. Coming up, well, we've got the breakdown. We'll be taking a look at Costco standing in line at the register to release its results after the close of trading today. We'll be right back.
Boom. Boom, 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 boom.
Stay connected to the markets, the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live at the New York Stock Exchange. Before we get to the breakdown, let me give you a check on where markets stand. We turned green on the S&P 500, just above the flat line. Over in the NASDAQ 100, let me give you a check of the Dow. Dow right now better by 1.25%. NASDAQ 100 still off by a little bit more than 0.5%. Russell 2000 better by more than 1%. So you've got the bulls pushing things forward right now, despite some of the pain from Oracle. Costco is on deck to report its quarterly results after the close of trading today. It's been a disappointing year for the stock. Shares have essentially marked time this year. They're down double digits year over year. Wall Street is expecting the warehouse giant to report revenue of more than $67 billion. But what will it take to move the needle on shares? Time now for the breakdown. For that, we want to welcome in George Silla, senior markets correspondent for the fundamental take on Costco. So this has been a difficult one for investors this year who have been in this, especially when you look at its performance in the couple years prior in particular. What's your take on this, George?
Well, I'll first address that, Diane. I mean, if you look at the last couple of years, really parabolic run for Costco. Business had been expanding quite a bit. But the challenge really was, and I suggest that's why we're seeing some drift lower and now retesting some areas that we haven't seen since April, is a simple story of multiple compression. The valuation was quite rich for Costco. I'll address that in just a sec, but if you do look at what they're expecting in terms of earnings and sales, they're expecting around a 5.5% increase in EPS, and around a $4.26 clip. If you look at Costco's top line sales, they're estimated around 8% growth, $67.33 billion versus $62.5 billion for the same quarter last year. I think what really the story is, Diane, is that what I said. Essentially, the run-up we had in Costco really caused a situation where the earnings multiple expanded. In fact, it was trading at one point in time when I covered the stock, just going back about 2 or 3 quarters ago. I do remember it was trading over 50 times earnings. So we're talking about sort of tech level multiples. And if you look at what's been going on since they last reported earnings, the sell-off in the stock has been very orderly. And typically when you see an orderly sell-off in a name that has some great fundamentals, a steady growth, steady margins, and their profitability is slowly improving, that signifies a multiple compression. And so for what it's worth, if you look at the earnings estimates going forward at $20.15 this year, next year at $22.14, we're talking between 42 and 39 times multiples for this year and next year. That is more in alignment with their historical averages on the last 5 years of around 42 times. The kicker is if you look at the net income margins, as well as, of course, gross margins, both those numbers are higher by about 70 basis points. So as the stock price is coming down, earnings are slowly creeping up, and that's causing now that multiple to compress. So perhaps this quarter is potentially a turnaround quarter, not necessarily just from a fundamental standpoint, but also potentially for a technical standpoint. The key ingredient also, keep in mind, will be membership fees. In total, if you look at the fees last year or trailing 4 quarters, $5.3 billion in those fees. It's only 2% of their total revenue, which was around $275 billion. However, it compromised about 50% of their $10.3 billion operating profit. So membership key, as well as membership growth, is really key for Costco because it's a low margin business from a competitive standpoint.
That's a great point about the membership fees, because I think I've mentioned to you before, I was late to the party of Costco and became a member earlier this year, and whenever I go in there,
you were late.
It's full of people, so I didn't understand what was happening with the share price. So I'm glad that you put in the context in terms of how it was trading with, kind of like tech valuations. Any final thought you want to leave us with on Costco as we lead into the earnings or the expectations?
Yeah.
Well, I think it comes down, like I said, it comes down to membership volume, so total volume. I think they're going to probably talk about their store opening footprint, which they're expecting another 29 units this year. They do have quite a bit of cash as well, about $15 billion on the balance sheet. So they seem to have a little more financial flexibility. But nonetheless, if they don't open too many stores or have some outlandish projections, that might be accretive to earnings for the company, and that also might be an opportunity for them to demonstrate, at least from a price standpoint in stock, a trend reversal here after it's hitting, like I said, those lows in April. But it doesn't mean it can't go lower from here. But technically, the setup looks promising.
All right, thank you, George. That's George Sillis, our senior markets correspondent with the Fundamental, to take the breakdown on Costco heading into its earnings. Let's get Tom and Kevin back in here for example trade purposes. All right, Tom, you've got this one, the example trade in Costco. You heard what George said about how shares have performed, not just this year, but historically. What's your approach?
Yeah, we haven't seen a trend like this, 10 months to the downside since hitting those all-time highs in February. And we talked to Likefolio about this stock, that they had seen some of their data, which is usually top end for Costco, starting to come down. So maybe that's already built into the shares at this point, but I don't know how you can kind of bash against Costco. It's the best shopping experience in the world, in my opinion. But let's take a look at what the option market's pricing in. About a plus or minus $28 move either way in the stock. They give monthly sales data, 6.9% increase in November. They just released that about a week ago. That's still really solid growth for a retailer on this, and then they got that bonus of the membership fees. So I looked at a strategy, because they give so much data on a month-to-month basis. If it doesn't move a lot, we're going to look at a neutral strategy that takes advantage of some consolidation in the shares, because maybe a lot of the news is already built in to what the stock's already done. So I looked at a short iron condor for a neutral type strategy where you just want it to consolidate and not go out more than maybe that one standard deviation. Went to the December 12th, the weekly options. So just 1 day to expiration, really short-term positioning. We're going to sell an out-of-the-money put vertical. We're going to sell the 850 put, and then buy the 845 strike put. And then on the call side, we're going to sell an out of the money call vertical. We're going to sell the 905 strike call by the 910 strike call. So 2 short out of the money verticals that creates this short iron condor. You're going to collect roughly about 2 1/4 credit, probably trading closer to $2 right now. As the markets come back here, implied volatility has gone down a little bit. But the credit you collect is what you can make. So if you collect $2.25, $225 per spread, with $275 in risk per spread on this one, Kevin. But you want it to stay within those break evens, Kev, between just below 848 on the downside and just above 907 on the upside.
Yeah, think about the expected move, around $28. Times that by 2, that's $56. Your strikes are $55 wide. Probability of out of the money on your put side is 79%. Probability of out of the money on your call side is about 75%. So this is high probability.
Well, it's on sale.
Collecting theta, and this is risk defined. The risk being the difference between the short strikes and whatever credit you take in. And one side's going to make money, Tom, but if it stays range bound, you're looking to sell this and buy it back as cheap as possible.
Yeah, and that's a good point, Kev, because this is a really short-term position. You've only got basically 24 hours in this trade. We're going to see most likely that vol crush post-earnings, which should also contract the price of this. But the idea here is to let it go out worthless, right? You collect that $2.25 credit or $2 credit on it, it goes out worthless, and you get to keep that credit. But if it starts getting close to either one of those break-even,
they're out of my league, but it's at a year low yesterday, cost. If you look at the weekly, I give me, oh God, if you look at the weekly, ugh. I don't know about it. I'd say we get down to $800. I might like it. So I wait. Big knife on it and then take the trade.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
I don't know. It just looks like it's up too much.
On their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live
Yeah, my GI is a big hot one.
And real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we're seeing in real time the give and take of these markets because yesterday a really strong reaction to the Fed or the commentary from Jerome Powell. Today we started on a bit of a weaker spot, but I will say that all things considered, I mean, the Russell and Dow today firmly in green. We're seeing a pretty stark divergence between the performance of the NASDAQ and the S&Ps, which are both lower on the session.
Yeah, and it all comes down to, to relative, starting points. So if you would have told me at, 9 p.m. Central Time yesterday when I was getting ready to go to bed that the S&Ps would be down 2 points, 3 points, that would have been a massive win based off the futures that were trading down 70 or 80 points. So in some ways, it's actually been a really strong day as the market has rallied back. But the weakness has persisted in the NASDAQ. Part of that reason is one of the names that we'll talk about in just a little bit, which is Oracle. What a difference like 3 to 6 months can make in terms of a company's message and a street's belief in something, because this stock was like the new, standard bearer of AI not that long ago, and now it might be the culprit for a deflating of an AI bubble that's been this huge concern.
I know, and that's a really good point. I think that it also speaks to some of the narratives we've gotten a refreshed sort of really scope on Oracle and some of these earnings movers, as well as some of these individual news components, but we still have, of course, the behemoth that is Broadcom after the close today. So right now, sentiment out of Oracle, not exactly the tone that the bulls would have wanted, but one story, but it does tend to weigh on, like right now, NVIDIA. Look no further than the weakness we're seeing in shares today. And NVIDIA has been a weak spot pretty much throughout the week.
Yeah, and we talked about this, like NVIDIA has something going on dynamically where it seems like every time the stock rallies, there's selling pressure into it. And I don't know how to quantify that other than you just watch the stock on a daily basis and you see it happening in real time. But it's not really going down either. It's just been kind of locked around this 180 mark. So something to watch for sure there. But, lost in all of this, Jenny, is a market that's relatively unchanged, actually has 75% of the S&P 500 higher, has a Russell 2000 that's up by 1%, has a volatility index that's actually lower on the day. So what we're seeing is isolated to information technology and AI trade. And this is the best way for some of that de-risking to happen. Is it's not everyone fleeing to cash necessarily, it's just a movement into different type of stocks. And maybe for the overall broad market or for NASDAQ heavy investors, it's not a great outcome, but generally you'd like to see moving from stock 1 into stock 2 if you're a stock investor, not move from stock 1 into cash or into something else.
Yeah, and that is a very good point. As we do look at NVIDIA here, we are seeing, now again, a contraction of about 2% this week. So it's felt more stark than that when we actually assess the week-to-date performance of these major averages. But unfortunately, the Fed and all of the commentary from the Fed rate cut, not enough to propel markets higher today, obviously. But we'll start things off with some of these movers. A lot of earnings focus kick off our show today. And we'll be charting and trading Broadcom as well as RH with earnings out after the close. Then we'll be discussing Disney fears. We are seeing a pretty nice session, about 1.5% higher, and they did announce this $1 billion stake in OpenAI. This serves as potentially a way for them to really gain some AI exposure. We'll also be looking at Roku with an upgrade, as well as the broader energy outlook and how that ties into the mass AI build. So as always, this show's theme, I'd say overarchingly so, is all things tied to AI.
Yeah, no doubt. Let's get to some of these movers because the story of the day is Oracle. And we got Oracle earnings after the close yesterday. So in many ways, this is more recent news than the Fed. We had the Fed reaction, then we had the Oracle reaction. And the Oracle reaction was a negative one, and it continues to be negative with stock down 13%. What were your big takeaways here from what the company had to say? I have a thought on it, but I'm curious what yours were.
So some of the weakness that initially stuck out was the fact that they do see a $2.7 billion pre-tax gain from the sale of their interest in Ampere, but also that was not enough to offset all of the really concern over some of their pretty lofty exposure now to AI. Like $500 billion that is right now being seen as, I think a concern when they have a balance sheet that doesn't necessarily make sense given its foray into growth. Now, if you're of the thinking that they will actually see a lot of these massive deals, I mean, like monetizable, then you would say that this is not a concern. But I do think that after a revenue miss and after, I mean, just some more concerns about its financial positioning, this only reignited the more bearish way of thinking that was saying, hey, Oracle's pretty over-leveraged into the world of AI right now.
Yeah, and so how my brain thinks about things and works, and you know this from our conversations, I like to look for something to compare it to, or think of an analogy in something else. But to me, you don't need to look beyond the market. This doesn't seem all that different than a couple of years ago when when Meta Platforms went all in on this metaverse at the same time that their core business started to miss the metrics. And so it was like, hey, what made Meta such an attractive investment for so long, when it was Facebook before, was that this is a company that is growing really healthy and has just such a cash flow positive business. Well, the growth story started to be questioned a little bit, so it's like your core business is slowing down, but then also you had a company and its leaders that was just plowing all this money into something that, I don't know that the street was totally bought in on. Now, I don't know that AI and metaverse are fair to compare against, but in the same way, and not to say that Oracle's not growing tremendously fast, even with their guidance that's slightly below expectations, still a huge number, high 30s, low 40% growth, but it's slower than the market was expecting, slower than Oracle led the street to believe a couple quarters ago, wherever that giant move was, that everything was just going to be, home run after home run. All the while, the general street feeling recently has been, are we spending too much on this? And it's like all these other companies are kind of dialing things back or taking a step back and thinking about it. And Oracle's just like full speed ahead. They're accelerating their spending. And to your point, they have to take on debt to do this. And it was already question marks before. I think those question marks just got, or those questions, I should say, just got louder after this.
Especially because, okay, so their backlogs, they figure out, I was trying to think of the $523 billion backlog, that was up $68 billion from last quarter. And that's a really key metric for their transition into, not just being a cloud company, but into AI. And so for a decade, the company's legacy business and software sales has been able to grow slowly, but it did have these high profit margins. So 5 years ago, they began implementing actually more of this Microsoft cloud strategy, which is moving customers to cloud-based software and building out rentable data center infrastructure to compete with, say, like an AWS. But building data centers, is an expensive business. They did report a record $12 billion in CapEx, which is actually pretty small compared to, say, like Alphabet, Microsoft, Meta. But it does also then continue to say full year CapEx, $35 billion to $50 billion was what was boosted to. So that's a pretty big amount of spend when you have, again, a growing backlog at this clip.
Yeah, Wayne, let's talk about that backlog, because that to me is the big question mark that not only I have, I'm sure you have, but analysts have around this company at the moment, which is you have interest in being this big hyperscaler cloud company. But interest is only useful if you turn that order book into actual sales. And so there's a supply constraint that they're not the only ones facing. But at some point, if you're on a wait list and you never get the product, you're not going to pay for it. And so they have a lot of interest, but they got to actually meet that demand before that demand looks elsewhere.
Yeah, and I think that is exactly a great way to depict what is being seen as the concern right now. Is that, it has to be more than just a tell me story. You have to be able to actually put up results that speak to the math that you're spending is being successful. And so I think that question does remain still a bit in influx, but obviously today price is more reflective of these concerns as we're down about 12.8% and actually easing off of session lows at these current levels. So our next name today, a stark contrast with some of that negativity, is Adobe, which is up just shy of 3%, and a very different type of price performance though going into this report. I will say that the narrative around AI and Adobe has actually been fairly pessimistic and fairly concerning given the fact that for so long this company has been able to operate in a world which is like their cloud creative software as pretty much the best in breed and the only real name that is able to offer the type of marketing and advertising tools that they do. I was appreciative of the fact that they saw, I mean, enterprise customers driving growth, so that's consistency, but also the fact that fourth quarter revenue is continuing to evolve and grow, while also AI is driving more of their business. And so their tone was almost a stark contrast, because they were saying, hey, we're aware basically that what we're doing in AI right now is not fully working. So they said that we're going to see more and more of these AI tools integrated into their Creative Cloud, like outside of just say, you know, right now you're able in a PDF document to use their AI assistant. Firefly is what's
I'm back.
as their tool in more of their.
I was watching MIGI.
Now targeting more of these marketers to make their tools more applicable to say an enterprise scale, which I think is why we're seeing such a positive reaction. This is sort of shifting and rethinking an AI strategy for a company that has not been seen as an AI winner.
Yeah, and I think all that is exactly right. And I'll even add to this, we've talked a lot about the importance of story and narrative around stock investing and stock trading. We're watching, in my mind, the pendulum of sentiment around AI just shift. It swung over the last year, so much so that names like Adobe and Salesforce were cut in half, or even more so in some of those cases of these software companies, because it's like, oh, ChatGPT or OpenAI or Grok or whatever, you know, pick your service, is going to render these companies obsolete. And it was like, oh, maybe we got a little bit ahead of ourselves. And it's slowly but surely presented an opportunity. One of the things that the guys on Fast Market always talk about is the bar. Is the bar high going into it? Well, Oracle set the bar really high for itself, and it failed to meet that bar. Adobe has had a lower and lower bar because there's question marks around the company. And there are question marks about, is the company struggling, not, you know, how good is this company doing, which is maybe the questions that are asked around Oracle. And we've watched the last 4 quarters. The stock was down almost 14% around earnings, down 5%, basically unchanged, and now it's up 2%. So slowly but surely, I think we started to see that pendulum swing back to a more neutral basis when it comes to these AI stocks or the ones that are going to be disrupted, where it's like, maybe, but maybe that's not going to happen today. Maybe it's a multi-year or a decade story.
I think that that's definitely, we're seeing more like a neutrality. I agree with some of the tone from Adobe, where it's not so much punishing, but it's acknowledging that it's going to be maybe a more long, drawn-out process, as I think it will be for a lot of these names that are trying to dive into the world of AI. And I mean, consumer adoption is also, I think, still a huge part of this, where they can unveil these tools. Are people actually using them? But hey, as far as this quarter's
nice little bounce. So just getting ready to get into that thing. We bounced up to 63 here. I just had my order ready, just a little bit more. And then boom, it got halted. SPX bounced off the 63.
still been, as far as like the financial health of this company, you know, it's not been consistent, yes, but it has at least been able to show that they are definitely continuing to spend into the weight loss and diabetes treatment world, which has been a huge boom for this company as well as its competitor Novo Nordisk, which is underperforming a bit on the year now. But last but not least here, just to dive into CrowdStrike. And CrowdStrike has been, I mean, a pretty unstoppable force. We're up another 1.5% this week and up 49% nearly on the year. Now with some analyst news today, we got an upgrade to buy at Freedom Capital. I will say that we're pretty much unchanged now on the session here, but seeing more analyst commentary with this name is very much loved by the analysts that cover this name. We saw just a few days ago, Daiwa was also another analyst raising their price target to $560 from $530 with an outperform rating. I mean, as far as like the most recent analyst coverage, it's very difficult to see anything negative, but we did see from Freedom Capital today, they cited this improvement in their gross and operating margins, as well as just continuing to beat expectations and see this operational momentum, which is, I mean, again, clear by their price performance this year.
Yeah, nice message from the analyst here, upgraded by huge price target adjustment, and we keep saying it, when it comes to the cybersecurity space, it's really hard to come up with a narrative where there's less spending in this space. So then it just comes down to how fast is the growth going to be, who are the winners, and according to Freedom Capital and the analysts over there, CrowdStrike's one of them.
Yes, and so a vote of confidence not being reflected in price today, but price target of $550 would definitely imply upside from where we are currently even trading. We'll leave it there at the top of our show today. Coming up next, though, it's time to dive into the charts and trades of two names with earnings out after the close. The behemoth being Broadcom, a name that's up now 72% on the year, and almost in perfect inverse is RH, which is down about 16% on the year in this report.
AMD this morning up $6. NVIDIA Damn it. I don't understand this monitor, why it does this to me. That's some tense music, baby.
To what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
MIGI, baby. Look at that thing go.
With the best full-service wealth management skills in the biz. Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Invest Day. It's now time to dive into the technicals, especially on two names with earnings still ahead, those being Broadcom. I want to say Oracle, it is not Wednesday. Broadcom as well as RH. Joining us is Victor Cat, of course, our chart master, to help us really follow along with what we can expect for this name. I know it's very difficult to gauge earnings moves just based on, technical snapshot, but walk us through some of the recent price activity we see for one of the most valuable names in the entire world, which is Broadcom. I think highly underappreciated in that regard.
Yes, as we were saying just before this segment, not exactly a household name, but a very important company. Last time I checked, number 7 in the S&P in terms of its market cap. So when we do look at our recent price activity, by one measure, you could say that we have this white trend line here going across these low points here and here as well. So the uptrend is still in play. Another thing to consider, though, is you could also draw these two blue trend lines here, giving us this rising wedge type of shape here. Typically, this is regarded as more of a bearish type of pattern here, but really it can go either way. What you'd be looking for would be a big push beyond either of those two boundaries. In the shorter term as well,
1472 needs a break on MIGI.
Here, 386 was an old high close. That's about where you had a little bit of resistance here. That could be a supportive area to watch going forward. We also have right here our previous high near 403, as well as our intraday all-time highs for 1461. So when we look at our moving averages now, we have our yellow 21-day exponential moving average representing one trading month here. That lines up pretty closely with that 386 level. The 21 EMA comes in just above 382. So a noteworthy potential point to the downside there. We can also see our orange 63-day EMA lining up with our longer-term trend line near about 357. So another important area potentially to the downside there. Momentum is a bit curious too. This is why we often say that you shouldn't just base your trading decisions on one indicator here, because while the RSI was showing bearish divergence here, price making higher closes while RSI making lower closes, we had repeated crossovers into that overbought area, which is usually a sign of strength is how it's typically regarded. So kind of a mixed signal there in the longer term. And remember too, RSI readings were still pretty high, even if they weren't in the overbought area here. So we can see now we brushed up against that longer term trend line here. We'll have to see if earnings can rewrite that particular story. Finally, we can see our volume profile point of control. This one shows that we have a volume node here. The biggest one close to current price activity comes in at around 345 or so. So that is pretty close to our confluence of our orange 63-day EMA and our trend line. So that would be the point to watch if that area does get breached. Another smaller volume node right about here, this little pocket of activity near about 370 or so could be another point to watch to the downside. To the upside, plus one standard deviation channel, one standard deviation up from the linear regression line, 434. So a potential idea for resistance or a price target.
Okay, so with all this in mind, we're obviously our lower stage Broadcom shares at about 1.7%, which is actually outperforming, say, like NVIDIA, which I would link it most closely to. But as we do think through now trading this day, I mean, given the fact that we've rallied 72% on the year, this is one of our strongest performers in the entire AI trade.
Well, yeah, one of the things too with all these Oracle spending concerns, like ultimately a lot of that's going to places like Broadcom and NVIDIA. One might think that might be positive, but maybe we'll find out later on this afternoon. Looking at a neutral bullish strategy, a short put vertical spread. Now, you could go as near term as tomorrow's expiration, but elected for this example to go out to the end of next week. Give it a little bit more time, a little bit more cushion to potentially be profitable post-earnings here. So December 19th, 375, 372.5, short put vertical spread below the market, collecting a credit, creating that risk reward where you can make 75 and you risk 175.
MIGI resumed.
And you simply subtract that.
Shut up. Speak when you're only spoken to. Support's just right above $12. Actually, it could be $12.83. Adjusted. $13. And I'm not sure about that. There's really no news on it. Mawson Infrastructure currently presenting an emergency growth concert. So the only reason it's up is because of that. You know what I'm saying? Mawson Infrastructure Group. What do they do? That's a great question. Oh, SPX is pulling back. Prepare ye. Ladies and gentlemen, prepare ye. Landing gate 1675, 6882. Double bottom. Right now we're at the 63 EMA. Please put your safety belts on. You ready? That's the sound of an airplane taking off.
You wouldn't settle for baiting.
Sound of an airplane taking off, please. Prepare ye. Ready for takeoff. This is 63 EMA. Watching it close. Yeah, Jimmy saw the chart. It was at $40. The crowd's going wild here at Sports Arena. Right now I have resistance at 1472 to break. Support to hold $13. If not, $11.25. The 9 EMA. He's serious. We have a double top coming up on AMD. Beautiful call, James. Your Apple call this morning was outstanding, by the way. No, thank you very much. Being in the now. Why did I decide to take the Apple this morning? Why? Because of all the hype. Okay. Here we go again. Yeah, the pumpers are in on it. It's a pump right now. It's popping off on the scanners. And it's only going to a conference. It's not that big of a deal. Do you agree? Say yes. If you disagree, say no. Randy. What? Do you agree or disagree? Yes. What's the 15 minutes say? I'm gonna take it today. I'm looking for the SPX. Yeah. Come on, baby. I think you know what to do. 68, 83. Let's put a price line there so I won't be in denial. $63.8309. It's right now 1:35 Eastern Time. Oh God, it reversed. That sucked. But I see why now, double bottom. Okay. Oh yeah, double bottom, higher low. Dang, look at her go. Pets boom. Look at you. SPX boom. $68.75. Boom boom.
are providing on their earnings calls. And the thing that we are listening to now are the announcements from the Alphabets or the Googles of the world, and the Metas about how they view CapEx and what is the pace of their overall AI build-out. Because of the pace of that build-out drives the demand for chips, and the demand for chips or the use of the chips dramatically is changing the landscape as it relates to power specifically. Just go back a couple years ago, oil was really the main event as it related to being an energy investor. And it continues to still be a big driver, but power prices and the need for an incremental build-out of power, where's that power going to come from? Is it going to come from renewables, nuclear, natural gas? All of those are things that, for the most part, were pretty flat and a little bit boring a few years ago, but are very exciting as we here today.
Okay, so with that, I mean, right now, production growth remaining relatively low, and also oil prices expected to average between $60 and $70 a barrel. I mean, what does this mean now for the global supply chain dynamics, frankly, because so much of our supply chain is tied to everything energy?
Yeah, as it relates to overall oil prices, we think that is a price where kind of everyone wins. The producers across the globe win between $60 and $70 per barrel. They're making adequate returns of 15 to 20% or even plus, depending on the location. And certainly the consumer is paying certainly something less, well less than $4, depending on the geography per gallon at the pump. It's not overly inflationary. That's kind of the sweet spot where we think everyone wins, and we do think that the beginning of the year, you're probably closer to that $60 per barrel for oil, gradually moving up to $70 per barrel as, for the most part, production growth is flat next year, but we do think that demand globally continues to increase by a little over 1 million barrels per day.
Brian, energy is a unique space, whether it's nuclear, coal, oil, whatever the source. It doesn't seem like we ever need less of it. And so it's always trying to figure out just how much is it going to grow and where is it going to grow. As you watch the AI stuff continue to advance, I'm sure it'll get more efficient. What are you looking for a sign that maybe some of that growth will slow down?
We're not seeing that whatsoever, that the growth in overall energy demand is going to slow down. Some things that could result in a slowing of it is just increased efficiency as it relates to the potential chips. So we're not seeing that. And if you do see increased efficiency, we're expecting demand for that to go higher. But those are the things to look for, and frankly, that's the reason that electricity demand has been relatively flat over the past couple decades, because demand has generally risen. Those devices have continued to get just more efficient, which is great. But going forward, we're seeing kind of a bigger step change in the overall amount of energy demand that we are using. And to your other point, it does seem like we just continue to use more and more of every source, if you will. If you go back a couple hundred years, we were primarily using wood for heating it. Well, certainly that's not the primary source today. We're actually using more wood today for heating than we ever have before. That just seems to be the case with whatever energy commodity we buy.
And it's an exciting time to be involved in the energy world. Also exciting to see the grid, I'm sure, just continue to transform before our very eyes. This is happening. A very quick shift is happening, as we've all sort of discussed. But I appreciate it, and really great insight into a critical space for the overall markets. Brian Kessin, Senior Portfolio Manager at Fortis Capital. Now, coming up next time to discuss a fun story regarding Warby Parker and an unexpected partnership with Alphabet, as we are seeing more and more of this push to develop these intelligence eyewear offerings. We'll dive into that story coming up next.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Next Gen Investing. It's now time to discuss Under 30 today, which is Warby Parker with a partnership with Alphabet. Say that 5 times fast. I'm joining us is George Tillis, New York markets correspondent for the network, for some more insight on this story, which I think is fascinating. As AI is obviously coming into our lives in every which way, but now also coming into the eyewear space.
It is. I mean, yeah, we talked about Warby, I believe, in the past. I mean, this is actually a pretty popular now and trending designer manufacturer and even retailer of eyeglass and eyewear. One of the catalysts that's been going on is it's really been a growth story for a company that just over the last couple of years has grown its store base from about 160 to over 313 across North American markets, U.S. and Canada. And as of recent, too, the company did announce sort of a partnership
George.
with Google. They're going to be developing an AI glasses assistant.
Now, we are approaching that time period where I've got to put my foot down and try not to take that much risk. Now, we are breaking below the 21 on the 1 minute on the SPX. We've been bouncing off the 63. As you can tell, one of them, 2 bits and a freebie. And we do have a yin-yang resistance. And I'm going to put that on here right now, right there. Boom. I said boom. Oh, it's not. There it is. That's it. That's it right there. That'll create a head and shoulders. Magnificent. I feel one coming. Prepare that grading pen. M-I-G-I-L. Ooh-doo-doo. Mm-mm.
Without a pause, so we
George.
a pause around these resistance areas around 29.
Yeah, and Warby Parker today, modestly lower. Of course, this news has been developing over the last
Okay,
couple
prepare
days.
ye.
Actually higher on the year, which in the world of retail.
Jenny Horney speaking, but Jimmy Howard speaking now. She looks horny today, too. I don't even think she's wearing a bra. We're off to 63. Randy, my next resistance is 16.99 on MIGI. And it's getting late in the day. So this could be the last run. Always clean. This is James. May I help you? This is a recorded line. Johnny, state the location. We're going after these people. Is this Melissa, that chick I had last night? You were kind of like this last night too, baby. You were quiet. You know what? You can suck my dick. How dare you call me when I'm in the middle of a trade? See, we have a rule around here. You don't call after 8 o'clock unless you want to go out on a dinner date. And you don't call during trading hours unless you want to go out on a dinner date. And you don't come over after 8 without a notice. Okay, we're open back up. Now we got to respect 1472. I think that's, yes, 1472. You got a megaphone.
The 2026 supply surplus is taking shape. Also, our panel is ready to talk all about yesterday's Fed cut, what it means for the path for rates going forward. Also looking at productivity and deficits and long-term yields. All right, here's a look right now at the market. As I mentioned, the Dow Jones Industrial Average is up over 600 points, hitting new record highs here. It's at 68. I'm sorry, the Dow's at 48,669 at 1.25%.
And now
The Nasdaq 100 down 162.
the time is near to reach my final curtain.
$71 at 42.96. That's looking like a record to me too. I'll check that. In the meantime, we have some of the big stories that we're watching. Kevin Hanks, host of Fast Money's here, Schwab Network, and talking about workload.
And now
10-year bond yield here at 4.13. Certainly worth noting. What are you thinking when you're looking at the big picture? And then I want to get to Adobe.
oh, which I'm certain.
Yeah, you know, the macro setup going into the end of the year, Nicole, is pretty solid, right? The
It was.
Lower, 10-year yields are lower.
Mr.
Crude oil's
Hickey.
lower. We're coming through a good quarter of corporate earnings, and now we've got a rate cut and QE on the calendar now. So all things considered, this is setting up for a pretty positive end of the year. Now, anything, as you know, anything can disrupt that, but we're rallying today. If you look at the S&P equal weight, it's having an actually really strong day here. So even when information technology was lower on the day, the market was hanging in there, and equal weight was doing much better. So this might be a day, Nicole, where the 493 is doing better than the 7.
Actually, Mike McCurr said the equal weight S&P was at an all-time high. I mean, I didn't double check it myself, but I believe him. And so that's very interesting. It tells the story, right? What do we think about Adobe here? I mean, we talk about at least some upbeat parts of the story, right?
Yeah, baby.
Yeah, well, you know, this is a stock that was left out of the AI euphoria, right? It was actually down and beaten up. Well, it's having a great day today, although it was down at one time, up. It's been kind of all over the board, but now making its way higher. Why? Well, their earnings, non-GAAP of $5.50 a share, GAAP earnings of $4.45 a share, both beat estimates.
63, the 63, the 63, the 63. Shoulder line of the head and shoulders could pull back and hit the 63 again. Like oh, was it today or yesterday when Charlie Kirk got assassinated? I think it was yesterday. I can't believe somebody'd shoot someone like that. Sad thing is, my liberal friends don't give a crap about it. Back in the day, they would be appalled. Nicole looks charming today. Some nice earrings. Look at the big old long droopy ears. She looks like an M&M or a boxer or an MMA fighter. Oh God, I keep saying it. There we go. We reached the top of the megaphone pattern on MIGI. Back at the 63. I don't know if it's going to hold it this time. 1, 2, 3, 4, 5. We're closing in on the end of the day.
Gold, I mean, there's other alt investing too. Are you looking to that more or less than usual?
Yeah, so at our firm, we manage money for high net worth families, so we have a lot of private market exposure. Typically, we have 50% or more in private markets because we need to be truly diversified, so we pay an awful lot of attention to that space. One area that we're kind of not backing away from completely, but trimming where needed is private credit within direct lending specifically. So when you're providing a loan to a company and backing it with the equity of that company, we feel like that area's gotten a little frothy, and we're now switching that out for asset-backed loans. An asset-backed loan within the private credit market is very simple. You're loaning and you're backing it with a specific asset where you know the loan to value and that sort of thing, versus a company where you're trying to dictate what the equity price will be as far as the collateral goes. So that's one trade that we're currently doing. We're lightening up with the direct lending and we're adding to asset-backed. Our best idea for next year within private markets is long-short funds. The way you can play that as a retail investor is just simply a long-short mutual fund. The reason why we like long short so much right now is because you can bet on the winners of AI and then the losers as well. So going back to the initial theme that we're looking at next year as far as a show me market, we think that there's going to be clear winners and clear losers, and therefore we want an instrument that can make money on both sides of the trade.
It's great to see you, Patrick Kennedy. Thank you. Founding partner, All Source Investment Management. Good to see you, Patrick. Really appreciate it. Coming up, Options Corner, Tom White standing by. He'll highlight the unusual options activity from the day. And now investors are looking to trade on recent news of Taiwan Semi, NVIDIA, and Nike. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the Watch List. Time for Options Corner, where we analyze the usual options trades that we see throughout the day. Tom White, host of Fast Market here on Schwab Network, is with me, and we found a couple of bearish trades, one bullish. We saw Oracle under pressure. We're watching tech faltering a little bit. But what do you think of a name like Taiwan Semi? You found a bearish trade. What's the news and why this trade?
Yeah, tech under pressure here today after that Oracle earnings. Not surprising here. Taiwan Semi did hit all-time highs yesterday, still up about 53% so far in 2025, but pulling back nearly 2% today. The company did yesterday release a November revenue numbers, and those continue to grow.
Again.
Demand for the processing of these chips continues to expand. They hold about 60 to 65% market share in this space, and they continue to ramp up. Their sales growth in the third quarter fiscal 2025 earnings was impressive. 40.8% year-over-year growth in revenue. Earnings per share rose nearly 50% to $2.91. And I mentioned those numbers that they just released, and that's what drove the stock to all-time highs. Those cutting-edge chips, they make the 7 nanometer or below. Those account for nearly 3/4 of their wafer revenue of the company. The 3 nanometers, those are those high-end ones. Those are up to 23% and continue to expand, and that's where they're the big majority leader. But even with that said, the stock up this year pretty significantly, over 50%. The pullback from those all-time highs that we saw yesterday. We saw some bearish activity, and this is on the January 9th weekly cycle, so about 29 days to expiration. Trader bought 10,000 of the 300 strike puts, paid an average debit of just over $9 for these puts. So that takes a break even where this trader starts to profit all the way down to $290.90 over the next month. That's about 4% below the current share price. So on a percentage basis, pulling back that much doesn't seem like a lot in the next 4 weeks. Put volume is double normal daily average volume. But one interesting thing as far as the amount of puts trading versus calls, put-call ratio is nearly 2. At this point, typically a normalized put-call ratio is 0.7, 0.8, something along those lines, where calls are out trading puts on a consistent basis in most names. But here you're getting double the amount of puts trading and calls, and this trader thinks that we're going to see some weakness over the next month.
Okay, I mean, look, what a great run this stock has had. Incredible, going up to $313.98 recently, that recent high. So I understand, obviously giving back too. Let's talk about NVIDIA. I mean, we were talking a lot about NVIDIA. I even saw the latest news that those H200 chips will be shipped to approved customers in China. And China, of course, is making sure their companies say why the local alternative will not suffice. Why do you want an NVIDIA chip? Let's talk about the bearish trade count.
Yeah, it seems like even good news can't help NVIDIA out at this point. It's down about 2% today, but off the lows, it was down over 3% at one point.
Yeah, and Jimmy called it.
But even good news can't seem to propel this stock higher. I think a lot of the skeptics.
SPX 2410.
The investments that these big hyperscalers and tech companies are making, will that eventually dry up? I don't know. You listen to Jensen Huang, they've got like 3 years of orders that they can't fill because demand is outstripping supply.
Is that a problem?
You mentioned, earlier this week when President Trump said they're going to be able to allow them to sell that H200 chip to approved customers in China, while trying to take that a 25% chip sales will be paid to the U.S.
I don't know why they're so hard on NVIDIA.
Just about.
I mean, what? How many years? 3 years? All they would do is pump NVIDIA. It was the best thing going. Good 2 years straight, every single day. NVIDIA, 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 NVIDIA. Now they don't want to trade it. It makes no sense to Washboardjim. NVIDIA.
100 percent from the lows, like NVIDIA or more, like Taiwan Semi. What about Nike? Feeling bullish on that trade? Someone is. Explain what they're looking at.
Yeah, so Nike shares are up pretty significantly today. This is maybe on the back of that rate cut. Some of the consumer discretionary and some of the consumer-facing names are doing well over the last couple of sessions due to the fact that, hey, near-term interest rate cuts, that's probably a benefit for consumers, even though the long end of the curve, the 30-year mortgage isn't coming down at all, really, at this point. But they've got earnings next Thursday. I think this is going to be a key one because the stock's still down about 11% this year going into those results. And if you look at like a 2-3 year chart of Nike, it's ugly. And maybe it should be because they're losing market share. Tariffs are negatively impacting their business. Their margins are getting compressed. They're doing more promotions. Elliott Hill, the new CEO, he's not new to Nike, but he's new in that role, is trying to turn this company around. And it hasn't worked so far, but they've got all these measures in place. They're changing leadership, and they're trying to expand this Win Now strategy that they've got implemented. But over the last 3 years, revenue has contracted slightly on average. In the past 12 months, revenue has decreased by more than 7%, dropping from about $50 billion to about $46 billion. So growth isn't there for this company, even though free cash flow is relatively good. But earnings could be that catalyst because the bar's pretty low on this one going into earnings. We did see some bullish activity in here, and this was out in the December 19th monthly options that expire in 8 days, so you're going to capture that earnings bet next Thursday. This trader is. They bought 10,000 of the December 19th 65 strike calls. Paid average debit, these are in the money. Paid average debit of about $3.87. So the break even at $68.87 over the next week is about 2.5% above the current share price and well within the one standard deviation that the option market's pricing in at this point. So yeah, this trader taking a shot here at Nike. It hasn't worked out for anybody trying to catch this falling knife over the last couple of years, but maybe the bottom's in. Who knows?
Who knows? I mean, we did see such good news from On Holding, right? On this ticker symbol, those sneakers did so incredibly well. That stock is up 40% in a month. So they came out and said they're not doing discounts over the holidays. So there are some sneaker names that are doing well. Tom, great to see you. Thank you so much. Coming up, a look at oil. I mean, there's some breaking news on ships carrying Venezuelan oil, and that those linked to that will be seized after some legal processes. So we're watching oil, but there's also been a supply-demand concern. Too much supply, not enough demand. Let's talk about it.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. A record-setting day for the Dow Jones Industrial Average, which is up over 600 points today. Can't say the same for the NASDAQ as Oracle is weighing and some of the tech names. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange. We welcome in our next guest. Vikas Duvveti is joining us, Global Energy Strategist at Macquarie Group. Thank you so much for being with us. So we're looking at what's going on with oil. I mean, just now, moments ago, maybe you can comment. If you don't want to comment, say pass, that we are seeing that the U.S. is preparing to seize more ships transporting Venezuelan oil after some legal processes. How might what's going on there affect oil prices or oil demand overall?
Yeah, we think it probably will have some very short-term effects positively on oil because of the worry that if these seizures become more systemic and the volumes become big, right, it's not just a cargo here and there, then, oil will, I think, respond the way it did on the first seizure. We had a $1.50 rally and it's given it back, of course. And I think it'll do that again unless it becomes systemic. Then something else happens, right? Even if it's not systemic, but it's worrisome enough to a lot of the great fleet ship owners and operators, insurers, if they get worried that, look, maybe this ship will get seized, then I think the frictional costs will go up, and that could reduce the flow from Venezuela, even if the seizures don't become systemic. So yeah, it's a risk. I think the good thing as far as oil supply availability is Venezuela has been very diminished right over the years, and they don't export a lot versus what they used to. So the deltas may not be as big as they could have been. They export somewhere around 800,000 barrels a day. So even if you lose 25% of that,
Jimmy called the breakout on Adobe.
It wouldn't affect the market a great deal in absolute terms.
Fallen wedge, if you remember. Boom! Now it's hugging the 63.
There's concern that there's more supply than demand for 2026. Do you think, as we're seeing oil sitting around $57 or so, which way could it be headed? Are we seeing $50 or $70 first?
Yeah, we
I don't have a problem with it, Nicole.
$50 first camp. The oversupply that is still building, we think it's very difficult to solve until the price has to go down low enough to do the work, to do some of the solving. And it's really from everywhere. You've got OPEC with a great deal of production growth and supply coming to the market. You've got non-OPEC in Brazil, Guyana, the U.S. So there's just a lot of oil coming to the market, and the surpluses are the largest we've seen. They're primarily on the water right now. That's the tension in the market, is when will these on the water surplus barrels arrive into onshore storage that's much more visible to the rest of the world?
Understood. I mean, when we think about long-haul Americas to Asia shipments, is there any sort of signal on what's going on? I mean, what does it tell you when you look at some of the trends?
Yeah, great question. We think the signals are underway. The big one that we put a lot of emphasis on is that, regardless of what's on the water, and there's where the big debate is, like how much of it is sanctioned barrels, how much of it is just longer transit times that's elevating the amount of the water, and how much of it is real in terms of the excess barrels that will arrive on shore. But what we think is less debatable is that global loadings, right? So how much oil is being put on ships to export in the waterborne market is up 4 million barrels a day. That's way too much to absorb indefinitely in the water. Those barrels will arrive. It's way too much to absorb by running them through global refining kits. Like, there's not enough spare capacity to run the extra barrels. So we are very pressed to figure out scenarios where they won't arrive. But it is a fair debate. there's a lot of skeptics that say, look, I don't believe it until I see those barrels in Europe and I see them in the U.S. I see them in Cushing and, very visible places, which so far, you're starting to see it, but it's not enough to be convincing.
What about just a big picture on the economies around the world? I mean, how do you feel the economy is here at home in the U.S. versus some of the other areas, and how that might affect the supply chain?
Look, the global economy, the U.S. economy, both have taken a lot of body shots from inflation and the worry about slower growth, indebtedness, the tariffs, right? It's every variety of hit. And the resilience has been astounding. And we think, like we heard earlier on the show, 2026 could be poised for a nice breakthrough in a lot of fronts, including some of the global debt management, which is a real concern. Some of the moves being made, we think, could take a little bit of the pressure off that. And on the petroleum economy, we're seeing some good sources.
AMD bounced up $10.
India just posted really good numbers after being kind of average through the year. Spain just hit a record on gasoline demand growth. So, on absolute gasoline demand, but nonetheless, some of these things feel like they're left for dead, and we believe they're anything but. So we think next year could be a year of good demand and better supply.
Yeah, OPEC keeps the global growth number the same for next year, 3.1%. I think that's also worth noting. And of course, we always have the wild card of Russia, Ukraine, which is not done. I know yesterday we had President Zelensky and the U.S. saying they're going to hold talks on the peace plan draft, but we haven't seen any finalization there on that.
Yesterday I was asked, how was the market going to do today? And my reply was consolidation. And I think I nailed it again. It's the way it's been all for the last 5 trading days. Low, 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 low. Resistance, resistance, resistance. Now we're at a double top on the SPX from that breakout we had. Am I right, Randy? Say yes. I was right. Pretty clear channel. That is correct. Nvidia, Sam. Nvidia.
Trading at Schwab is powered by Ameritrade. Unlocking.
We have 26 minutes until power hour. Such a long day today. I think tomorrow I'm going to go get my real ID. I guess it's nothing like a driver's license, is it? I'm so tired, Uncle Albert.
And also, I should point out that there's one part of the market that is sensitive to the short end.
New high.
Small caps, and
We just got a new
we've
high.
seen rally today.
Understood. I mean, how are you feeling about the AI trade overall? You know, when people say bubble or the debt that's building, or is it the beginning of the revolution still? What do you think?
We just released our 2026 outlook, and we hit this one right on the head because it's everybody's question. And we did a little side-by-side back to 1999. And what you can see is that the tech sector and the S&P 500 is actually cheaper than the end of 99, beginning of 2000. And profitability, return on assets are actually stronger. So that's number one. Number two, the real risk is not so much valuation, it's earnings. And they will fall if we have a recession. But guess what? We've had stable capacity utilization for a year, well under overheating levels. It looks like a soft landing to us.
I mean, most people still think the soft landing. That's what I was going to say. You know, are you buying on dips? For example, Oracle is sold off today. Tech has been maybe a bit of a down. On a down day on tech, do you buy?
I think the issue with tech is thinking about it in a portfolio context. Technology is 35% of the S&P 500. Now, I mentioned that it's much more profitable and a little less expensive than 1999, but a lot of people may have holdings that are actually even concentrated beyond the level in the S&P. So one of the solutions that we've had is a simple ETF, SPXT. It's our S&P 500 X Technology ETF.
Ah, right.
Not such that you would zero out technology in your whole portfolio, but likely because you're already so concentrated that it could be a useful offset, especially if you don't want to sell and take capital gains.
Yeah, and it could balance out your portfolio.
Absolutely.
If you have a lot of tech in one area, you can have this one, X Tech. How about I saw you're looking at Bitcoin, Ethereum, some of the ETFs there. Where do those fit in the portfolio? Which ones do you like?
Here's, I think, a little bit of surprise here. The narrative over the last several months has been Bitcoin is just another tech stock. And that's not really true. If you just do your little correlation matrix, Bitcoin is less correlated with the S&P 500 than tech stocks, and it's not so correlated to tech stocks. And even importantly, it's not so correlated to gold and bonds. So the role as a diversifier is still there. We've got our suite, BITO. BITO is our flagship, but we also have BITU, our Ultra Bitcoin ETF. And look, if you want to hedge, BITI on the short side and a whole suite of crypto-related ETFs.
I mean, it's been sort of a risk-on or risk-off trade. I mean, it doesn't necessarily trade with any particular thing just yet right now, right? But when it's risk, has it been the alternative when everything's down, Bitcoin's up? We haven't seen that too much.
See, I do think that can happen, and
I don't disagree.
I bring everybody back to the little hiccup of the crypto-related banks. 2 years ago, crypto-related banks went kaplooey.
Kaplooey.
At the heat of that battle, Bitcoin went up, so it absolutely can happen.
So we got it inverse head and shoulders, Jimmy called. Triple bottom.
In your portfolio, and what is on the
63 EMA.
If folks who are looking for a little bit of a different way to continue to participate in the AI and tech revolution, ONDs are on-demand ETF. And it's pretty cool, that's my official word, cool, because it's a global portfolio. It's only about half US. It's got some names that you would recognize. It's got NVIDIA, it's got Uber, it's got
NVIDIA.
It's got Roblox. But the exposure to the Mag 7 is actually less than the S&P 500, so it can be a nifty little alternative way to stay invested in a very innovative approach.
Does it have a lot of AI in it? Because
Yes, it does, baby.
I'm sorry, does it have a lot of crypto in it? Because there are people who are looking for something other than Bitcoin. I mean, do you have like Solana in there or?
No, it's actually the on-demand economy, so it's not really crypto in there.
Right.
We're talking about the delivery, the drivers.
Oh, I see.
And so that's the exposure that you get. And again, the global aspect is a nifty one. So it's a nice way to have a little bit of a different spin on participation in the tech and AI space.
When we talk about the rally that we've seen, you know, it's been 3 years running through October, and there are a lot of folks who have high price targets for next year, higher than where we are now. What say you?
It's back to earnings. If you think about valuations this year, actually, they've come down just a smidgen because earnings have actually outstripped price appreciation. So when we look at 2026, we're really looking at the forecast for earnings. And if you go back to that dot-com tech crash in 2000, a key driver was that recession that hit at the end of 2000 and 2001. We go to an old school metric, capacity utilization.
Right.
The rule of thumb, if it's over 80, the economy is over here.
Well, nailed the support on MIGI.
77 right now. It's been flat like that for a year. That really looks like a soft landing to us.
I know you were looking at the valuations. I mean, sometimes valuations are soaring or astronomical, 100 times or 200 times, or sometimes it's just 20 or 30. And we look at some of the Mag 70s, and they actually, while they're highly valued, they're still not, astronomical. So some folks do think that maybe there's still some more room to the upside, right?
Trailing PE is 38 on the tech sector. It was 56 at 99.
There you go. That's the point. Thank you. That's really good, Cindy. Thank you for bringing us that. I mean, what did you think of something like yesterday when the Fed said that they're going to be buying treasuries? And I guess it grows the balance sheet, but they said solely for ample supply of reserves because the reserves have been cut down. And while it may last a few months, they said they'll let us know when it's going to end. But there are people who think that the Fed is likely to buy billions, I mean, maybe even $400 billion worth of reserves. What does that mean? Does it provide liquidity? Does it provide stimulus?
If you look at the size of the Fed's balance sheet,
I don't know about puts.
It's absolutely true that the kind of neutral size of the balance sheet is a lot larger than it was 5, 10, 15, 20 years ago. So it doesn't really appear that it's really a return to quantitative easing. But certainly the long end of the yield curve has been liberated. And that's really, really important because the market is in charge of that 10 and 30-year treasury, not so much the Fed.
Yeah, and so I guess this is just another part of the story. We have to just take this in stride because you said the long end sort of shown us the cards, right?
2, 3, 4. If we get 2% inflation, we should have 3% Fed funds and a 4% 10-year.
Okay, well, that's good. I like that. Thank you. What was the other one? Wasn't it like 3-3-3 to go to the golf course, or I forget what that was. I have to think about that. I'll find that. I know some of you know that one. I'm going to think about it later. Simeon Hyman, great to see you.
Thanks for having me.
So much. You have all those stats in your brain that I was thinking of. Thank you. Nice to see you always, Simeon Hyman, Global Investment Strategist, ProShares. Still have, we'll bring her a panel and talk all about the Fed and really what it means going forward. And do you expect one cut in the first part of the year? We'll see. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Welcome back to the Watch List. I want to bring in our panel, Brian Jacobson, Chief Economist at Annex Wealth Management, and Stephen Cates, Financial Analyst at Bankrate. Stephen, some of your thoughts on the Fed's moves yesterday?
Well, I don't think it was a big surprise that they made the cut, but it was interesting to see both the voting dissents as well as the soft dissents in the dot plot. Ultimately, it's going to be interesting to see what they do next year. The fact that inflation has been above target for over 5 years now, and the Fed doesn't appear to be fighting too hard against it, I just potentially call into question their willingness to actually step forward and put some pressure on making inflation fall.
And Brian, what are your thoughts? I mean, does the Fed need to cut more, and why?
Yeah, that's a good question. I don't think they need to right now. I think that if they wait until it could even be as late as June, that might be sufficient. And that, I believe, is in line with what the market is pricing in as far as the expectation. We are going to be getting a lot of data next week that's, I think, going to likely ratify why it is that the Fed decided to cut at this meeting. But with the ADP weekly numbers that we've been getting, hopefully that's showing a sign of finally that 4-week moving average of private sector payroll growth turning positive. Maybe this cut was enough for now, but I don't think it's the last one for the rest of for actually the next 12 months.
Understood. I mean, when we think about the big picture here, Stephen, what are you most worried about? I know we've talked a lot about debt on the rise. Is that something that we're worried about, or what else?
I think that there's concerns in the bond market over rising debt, or at least the availability of debt, whether that's public debt, which certainly there's plenty of, as well as private debt. We've got a lot of the large tech companies going into debt to fund some of the AI build out. And so that's one of the reasons that the Federal Reserve appears to be starting their purchases again. That's something that's keeping long-term rates right now a little bit higher than I think would have been expected given the cutting cycle.
So what about productivity gains from AI, Brian? How does that factor in your opinion?
Yeah, I think that's actually one of the bright spots from Chair Powell's press conference yesterday. Was it does seem as though he also is embracing the idea that artificial intelligence could enhance productivity, although we have had a few years in a row already of improved productivity, even though we haven't had the AI revolution. And if you get that productivity growth, it actually makes the Fed's job a lot easier because you can get good growth with low inflation and in some circumstances, actual deflation. So
new high.
His term as chair is going to be up in May. Maybe he's praying a little bit for more of that productivity boost to make their job easier.
Yeah, you wrote in your notes, even the Fed is getting excited about AI. It's sort of funny and interesting. Stephen, we're also talking a lot about the labor picture. How worried are you or not?
I'm not.
Well, I think the initial and continuing claims this morning, I think, is a good indication of a real-time view of what things look like. Now, that's not perfect, but we did see that initial claims and continuing claims have fallen quite a bit over the last 4 to 8 weeks. That's beneficial. We also saw that job openings from the JOLTS report have risen in the last 2 months. So those things are improving. Now, I don't think we're necessarily over the hump. There's still a lot of concerns over the low hiring rate. We've seen layoffs actually increase. So we're not out of the woods, but we may be coming towards something that is improving into 2026.
And Brian, you think they're pausing in the next, I guess, couple of meetings? Because it's been pushed out, March, April. What do you think there? I mean, and I know you are watching the debt. What?
That was one of the things from the 2004 to 2006 period. Chair Greenspan talked about this conundrum where they were hiking rates, but yet those long-term rates were falling. And now we have the opposite of that. And it's because back then there was a savings glut coming from China buying U.S. treasuries, but now we have a debt glut as far as deficits that really don't seem to be under control. And I think that's going to continue to be one of the issues that the market will have to wrestle with in 2026, possibly beyond as well, where you can have the short-term rate moving lower, but those long-term yields don't mechanically move lower. They can move to the beat of a different drummer, and unfortunately, that drummer is the sound of the Treasury issuing all the Treasury bills, notes, and bonds.
I know, Stephen, you're talking about some of the uncertainty going forward as we look at both labor and inflation. And at bank rate, I know you get a lot on what the consumer is or is not doing. I mean, with the projections, what we got from the Fed yesterday, we saw GDP going from this year 1.7%, the estimates were 2.7% for next year, and then unemployment will come down from 4.5% this year to 4.4% next year. I mean, both of those seem good, but you got to count on the consumer for everything, right? How do you think the consumer may fare or the economy?
Well, I mean, the projections from the Fed to me were sunnier than I expected. So that's good to see that they see a pretty bullish environment going into 2026. Certainly a fiscally stimulating one. I think the consumer so far has held up pretty well, despite the fact that sentiment is poor. And that's something that we hear anecdotally and certainly see in survey data. The consumer's still out there. They're still spending. I don't necessarily see that stopping anytime soon. So I think that we have an environment where we could, again, continue to beat the odds through 2026 as long as we don't have some sort of shock of any kind that we just don't expect.
And Brian, to investors, without being too political, there's midterm elections coming up. Thoughts on what, is there any sort of event next year that you're really watching? I mean, some people are excited about how the big, beautiful bill maybe weighed in, then you have monetary and fiscal stimulus, but there's also people who are worried that, we might have some black swan event or things might really turn around after, 3.5 years or more of a rally.
That's right, 3.5 years or more of a rally, and are we going to see now that volatility because it is a midterm year, and oftentimes the campaigning can, get a little vicious at times. But then also, oftentimes in that midterm year, that's after you have seen some of the good spirits coming out of the election, a little bit of policy changes that are oftentimes, what people had voted for, you get those, but then you get a little bit more tough love in the midterm year. And I think that really one of the big surprises could be around with rates, mostly because that is specifically like the 10-year, not necessarily what the Fed is going to do, because the one big beautiful bill, all of the incentives in there to have the capital spending on property, plant, equipment, research and development, those tax breaks effectively that corporations are going to get will affect the budget of the government. And so I would not be surprised if really the heightened volatility that we see is more in the bond market than in the stock market.
And look, I mean, we saw housing prices dipping, right, across the board in many cities as well. Housing prices are, I guess, maybe houses are losing their value, but rates may come down too. And you even had Chair Powell saying it yesterday while he talked about consumer spending was solid, business spending has been expanding, but housing activity remains weak. A thought there, Stephen?
Well, I think that we would need to see housing prices fall further to really see any meaningful return to the pre-2020 environment. I think we're going to have to simply work our way through this over many years. We pulled forward a decade, maybe, of housing price growth, 50% increase and more in some areas. I don't think we're going to see a drop back to the 2020 prices. I think that would be detrimental to the economy. But I think with mortgage rates slowly decreasing over time, and it may take multiple years to get back to even a 5 handle in the mortgage rates.
I'd say puts if we don't hold the 63 here.
Some areas more than others. But this is something that we're going to have to wait until wages grow into these price increases.
All right, Brian, a quick final thought.
Yeah, I agree with them. Really, the way you make it more affordable is either through your income, the rate, or the prices. Those are really the only three levers. And unless you get some spectacular income growth, housing is, I believe, going to continue to struggle, unfortunately.
All right, well, it's great to see you both, Brian Jacobson and Stephen Cates. Thank you both so much for being with us. And folks, we're up 654 points on the Dow Jones Industrial Average, a record-setting day. It hit 48,733 and change, so continue to watch for a record close here. So we have you covered right here on Schwab Network. We're looking at Market at Close next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
That's right. Carl's the best. Next to me. Okay, get ready, folks. I'm starting to get a little nervous.
Team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl. Schwab, a modern approach to wealth management.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the CEO of Tanga to discuss the state of the consumer and what kind of trends the company is seeing so far during the holiday shopping season. Today's overlooked stock is Planet Labs, which has rallied to a new
Bounced
record
right back
high
up.
after its latest earnings. And after the bell, we have a busy one for you today. We will have live earnings reaction from Lululemon, Costco,
Oh, Lulu.
and chipmaker Broadcom. But for now, Molly, take us through what's
Qcom.
today.
Thanks so much, Sam. Yeah, Oracle on my radar, the worst performer on the S&P 500 today after reporting a miss on revenue and AI costs that came in above expectations. The AI cloud player also hiked its guidance for its full-year capital expenditures to $50 billion. That's from a prior estimate of $35 billion. That sent shares down more than 10% right now. Adobe is higher, though, after beating Wall Street's targets for its fiscal fourth quarter and with its guidance. The software provider said it expects double-digit revenue growth next year as it looks to expand its AI business. We'll dive into those numbers shortly, but Disney stock also rising after announcing it will make a $1 billion equity investment in OpenAI. The 3-year licensing agreement will also allow ChatGPT and Sora users to make content with more than 200 characters across the Disney, Marvel, Pixar, and Star Wars universes starting next year. Lots to get to today, but before we get to that and more of our top stories, let's take a look at how the markets are faring as we head into the end of the trading day here. The S&P now firmly in the green here. We're up about 0.25% to 69.01. The Nasdaq is still trading lower, though, weighed down by Oracle, down 1/3% right now, 25,680.02. On the Dow, we're close to 1%.
It's now Power Hour.
8,737. That's up close to 680 points. And the Russell 2000 up 1.25% at 25 at 91.07. The dollar is lower on the day, down to 98, but gold is higher, up 1.8% right now, 43.0230 a troy ounce. Crude oil down more than 1%, 57.79 a barrel. And Bitcoin still holding on to that mentally important $90,000 threshold, but down 1.7% on the day at 91,235. I do want to check in with Sam, though, and see what top stories caught her eye today on the floor of the NYSE. Sam?
Well, it's more about just sort of unpacking some of the market action you just talked through, Marley. So we've seen now that basically the markets can rally without tech. We've seen this rotation post the Fed and Oracle earnings, and if you take a look at
Oracle.
take it out the equation along with communication services, this is actually a good day. So this has been described as very healthy. Obviously, there's been some disappointment around Oracle's numbers and what this means for the AI trade, and we are seeing chip names like NVIDIA, AMD, Intel, and Broadcom all being dragged down, and Bitcoin, as you just mentioned, is going lower with that trade as well, but it's a limited sell-off, and some of the talk here on the street today has been really about that, moving into next year, that it's going to be less about the Max 7 perhaps and more about the rest of the 493. Now, healthcare is catching a bit today. That's helped by a nice pop for Eli Lilly off the back of a successful late-stage trial for its weight loss drug. The materials are also one of the best sectors today. Take a look at the metals. Silver has been up over 5%, gold has been up over 2%, platinum up over 4%, and copper also up over 2%.
Qcom made on November the 5th.
A bit on the weaker dollar that we've seen. It's been down around the DXY 97, which typically comes off the back of the rate cast. And as Michelle Gibley from Charles Schwab told me this morning, as central banks outside of the US are sounding somewhat more hawkish, from Japan to places like Australia, pressure is expected to remain on the greenback. So that's what I've been watching. I've been watching the currency moves and what that means for the commodities and some of this rotation that we're now starting to see in the market out of technology into the rest of the 493, as I mentioned, Marley. But I'll send things back over to you with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn joining us here in our Chicago studios, co-host of Next
Jenny Horn.
Schwab Network. To talk about some of the big stories, we of course have to talk about Oracle putting some major pressure on the market. Shares under pressure following its earnings report yesterday.
Yeah, and there's a lot to like. So earnings did beat substantially, rose from a year ago. We also saw the sale of their interest in Ampere Chip, which was, created in a pre-tax earnings benefit of roughly 91 cents per diluted share. So that was positive. Revenue rose 14% year over year. That did come in slightly short. But their multi-year backlog swelled to $523 billion. That was up $68 billion from just last quarter. And it's a key metric as they transition into more of this cloud company. For, a decade, their legacy business saw software sales grow slowly, yes, but this was, saw pretty high profit margins. 5 years ago, they began implementing a very similar strategy to Microsoft, moving customers more and more to this cloud-based software subscription model to compete, say, with like an AWS. But building data centers is a business. This is a fact. They saw $12 billion in capex in the quarter compared to the $8.5 billion the street was expecting. They
Well, that's good.
Their full year capex forecast to 50 billion from 35 billion, and that actually feels small compared to, say, like
Yep,
your
they're not
Alphabets, your
good.
Metas, your Microsofts. But cloud now constitutes almost half their revenue.
Still a lot of
That's just
money.
shy of the 8 billion in the quarter, but it was up 34% from last year. Street feels very mixed on this, though. And I mean, we see notes from D.A. Davidson that say they're concerned right now, given the overall mix shift of their long-term profitability. But on the other hand, say like JP Morgan said, actually the success of the OCI ramp is necessitating substantial cloud infrastructure capex, which does, of course, negatively impact free cash flow, yes, but it does hinder some important valuation backstops, but ultimately, they view this as potential revenue that is going to right the ship, essentially. So there's different ways of thinking about it. Very stark, though, contrast with what we saw last report, when we saw shares jump as much as 40%, closing up on that session 36%. But when we saw this pulled back, I mean, now 42% from those highs made just last quarter, which I think speaks to the different environment of reporting that we are in AI.
It's very interesting. Oracle sort of as a case study on its own. We had a conversation on 360 round on Trading 360 today, where we had a bull and a bear for Oracle. One saying that remaining performance obligation number was sign for a bullish case, that it has a great future in this AI race. My other guest saying that he thought that it was blowing air into the AI bubble, and he didn't believe Oracle would actually realize most of those performance obligations. So a very interesting study here. Shares down about 10.5% on the heels of this most recent earnings report for Oracle. But let's move to a company that's moving higher. Also did earnings after the close yesterday. We had them on the show yesterday. Adobe. They had a really strong third quarter. They had guidance that was better than expected, and they're being rewarded for it today, although modestly.
Yes, modestly, and of course this name came into this report in a very different type of performance on a year-to-date basis. We're still down actually 20% this year, but saw higher fourth quarter revenue, and they expect sales to grow as they aim to make AI a bigger but also different portion of their business. So new AI features do include bringing more of these enterprise accounts to their business and also increasing how often customers are able to use these products. They said they've been working to infuse AI more and more into their editing suite, saying that they're seeing the significant strength with their premium model as well as at the enterprise level. And for that reason, I mean, like annual recurring revenue rose 10%. That was actually a decrease from the 11.5% growth we saw last year. But ARR was about 25 billion exiting at least this year, and about a third of their business is currently coming from products.
You missed the opportunity on Adobe.
Their goal is to eventually have all of them, of course, have AI exposure with things like, say, editing on Acrobat. You want to be able to utilize an AI software and editing sort of assistant. But rather than solely relying on competition with, let's say, its rivals, they're partnering with like the ChatGPTs, Geminis to integrate. And also they said that they're trying to work with more marketers to say this is, a great advertising tool that is unique to, say, the competition. I think that that's hugely encouraging because for so long the narrative that, I mean, I've been saying, the sell side has been saying, is they had a competitive moat, which was the difficulty of learning their creative suite of products. I mean, it's not easy to learn and to be fully functional in Photoshop, for example. That's the one I tend to have a pain point with, but now with AI adoption, you could say anyone can be basically a Photoshop expert with various other types of editing tools because it's all done by AI. But I think moving on enterprise levels, the smart choice, obviously, the street agrees here, because then you have more consistent long-term contracts, less and less the individual users like myself just saying, hey, I'll opt for AI. It's easier and it's cheaper.
Yeah, without grad school, I wouldn't know how to use any of the suites of their products, so thanks, Medill. But I talked to Adobe earlier today, their head of investor relations, and he said that their goal in these integrations with ChatGPT and so offering these lighter products is to meet the customer where they're at. So I think you bring up a really good point. You don't want to spend the time, no one has the time, a regular user who's not doing it for an occupation. So now they're able to do that with the assistance of an AI bot, and we'll see if it's a big driver for them. They are offering these as a lighter free version in ChatGPT for Adobe. Now we'll talk about Disney. This one also tied to OpenAI. They've now taken a stake in and put an investment into OpenAI.
Yeah, so Disney was securing this 3-year licensing agreement. They did become the first true major content partner on OpenAI's Sora platform for very short-form generative AI videos. They said that Sora will help generate various user-prompted social videos featuring the 200-plus channels from Disney, Marvel, Pixar. Into images using Disney's IP talent, likeness, or voices. But Disney is seen now as a major OpenAI customer, as they will say the OpenAI partnership can help them build various tools and just experiences through Disney Plus. And the $1 billion investment is, I mean, not a small investment at that, but it does also share their commitment to really being not only really responsible, it was like the language they used was like, you know, making sure that we are being very mindful of how IP is treated with now the broadening out of AI, but also more focused on some of their iconic characters and, you know, really further growing into the world of media that is evolving very rapidly as we've seen a lot of consolidation. And I know this is just one leg of the story with Disney today, but I do think it shows the commitment to continuing to innovate in a very competitive market.
Yeah, it certainly is a competitive space and an interesting setup against the broader landscape where we've seen Disney, you know, in conjunction with Warner Bros. Discovery and NBC Universal in lawsuits against companies who've done similar things with their IP material. And also sending a cease and desist to Google, saying that they are materially infringing on their copyrights as well. So a legal deal in play here for OpenAI, though, to use about 200 of Disney's characters. And our last one is a big mover on the day. Disney up 2%, but Visa up more than 6% after getting upgraded by Bank of America.
It's today pacing for its best day since April as far as its daily price performance. The stock goes lag behind the market this year, but analysts, at least at BofA, do believe that one factor behind that is not as bad as it's made out to be. And so, in fact, this is actually seen as a weakness that could become a strength per BofA. They upgraded shares to buy from neutral. Price target of $382 a share, which would imply about 12% upside from where we closed yesterday. But Visa, in their eyes, is a great business on sale. So we know that they've lagged in the overall market. They're actually right now not far ahead of their primary peer being MasterCard, with about a 9.5% gain this year. But the divergence from American Express, which is up almost 30%, has spoken, I think, to this widening gap of income groups as well as their Amex exposure to this more affluent consumer. But BofA sees several ways for them to get ahead, as the rise of stablecoins, they called it an attractive opportunity, not a threat the way the market would have seen this. And they did say that right now the regulatory developments related to stablecoins is going to be we've seen it actually as a leg of underperformance. They actually see it as a bright spot, as we did see shares slide pretty substantially back in June on the back of the being announced. But they believe that's an overreaction that stablecoins.
Okay, we're at the 63 now. This is do or die. $69, $8.95 put. At $2. Are you going to talk about NVIDIA? $68.95s. We're at 2 and I didn't take them. Now they're at $3.30, $3.25. Right here. kind of want to take them. They're at 185, 190. Now they're at 225. $2.15, there it is, 195. 1.95. Small risk. Make sure you got a tight stop. Let's go. Puts just may work. It's kind of risky though. It's kind of like almost a fallen wedge. Hmm. 230. See, it's a fallen wedge. It's a bullish flag. What to do? Yep, there it goes. Damn it. Yeah. Well, I knew better. Still in it, but we'll see here. I can get out now if I want to. Even. Okay, this is where I should get out if I want to. Boom. 258. This could give it enough breathing room to come on down and hit the 200. It's not moving much. So I think I'll sell them. Watch me sell it and the thing just knife right after I sell it. Fake sale. Putting in the fake sell. Market makers. 280. Now that's worth getting out right now. Thank you very much. From Washboardjim, offered the fake sell. 295. One more crow. This is it. Third crow. Thank you very much. The preed is on. Oh, man. Out. Always clean. Can't you see I'm in the middle of a trade? And you're not to bother me? That's how you do it. Wow, I'm impressed, Jim. I don't know how you do it. How does he do it? How does he do it? So I'm going to tell you how it's thinking here. Once it hit that third red candle, that was time to get out. Yeah, I got a lot of videos about it. Let me see. In a nutshell, it's about chart patterns, moving averages, and being in the now. Let me see if I can find a good video here. I might do another seminar. Welcome to the Sneaky Snake Trading Strategy, where we try to learn chart patterns, moving averages, and being in the now. I created this strategy almost approximately 2 years ago, and I had many strategies that I traded off of. I kept adding. During this process, I'm waiting for the snake to break out, so we have a chance. So that's a $38 right here, and I threw in this trend line. This is what I called here out earlier for another breakout. And I threw in this trend line. snake here, and you had a big engulfing candle. And I taught myself 30 minutes. It's going to break out. Depends on the time. A decent headset on the, maybe taking that trade. We got a double bottom down here off the 200 SMA. This looks like it's getting ready to break out. And I said, heck yeah, it is. It hit my 200 SMA on my 1 hour time frame. And it came back and did it again right here. Boom. So yeah, I mean, moving averages, chart patterns, pennant flag, getting ready to break. Now, if you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. I'm going to redo this line right here and make it real accurate. I'm going to show you how to do that. Take and put your line right on the body of that candle and run it up to the next body. Run it up to the next body, keep it a little bit above it, make sure it's right on it. I got a lot of different videos that you could probably go through, shorter ones, and I try to post a lot of videos of plays that I've made throughout the day. I got some seminars in there too. I got the megaphone, falling wedge pattern. This one I did a month ago, so you can go on the my YouTube channel. You got a lot of different videos in there where you could look at. Inverse head and shoulders is one of my favorite, the fallen wedge. Here's head and shoulders right here. There's a lot of little educational videos in there that could help you. Here's a learning video right here for you. My name is James Howard. I'm an ex-liberal. I just didn't like the platform that the liberals have been promoting, human trafficking, high inflation, wars, and you can understand why Kamala lost the election, because she was a human trafficker. She allowed 12.5 million illegals that are countable over the border. I think it's a lot more than that. Mostly men getting out of prison, raping our women, raping our children, killing our children, killing our women. But that's what the liberal magi is, open borders. Miss Mad Cow, she's getting ready to have a fit here. We're going to kind of watch her. I'm still saddened by her tears.
The AP has just broken some new news. This has just come out from the Associated Press. This is incredible. Administration officials have been sending babies and other young children.
Babies. Oh God. I don't know if I can take any more of
At
it.
least 3.
God. Human trafficking.
Thank you.
If we would have just put a stop to it, this would have never happened.
Shelters in South Texas. Lawyers and medical
All your tax money going to them.
They're gonna have to hand this off.
I make $25 million a year, one episode a week, and I'm crying over it. Spilt milk. We need human trafficking. Please. Please stop it. Woo! Uh-oh. Come on, look at them. Don't tell me. $3, what? $3.70? Now we're at the 200. Randy. Woo! We're at the 200 SMA JYH. This is a reversal idea. I'm not sure if it's going to work now. We're kind of late in the day, but we could start to move to the upside. So Jimmy's going to look at his puts. Oh God, they're at 430. Brandy. That's $1.50 I left on there. Ugh. So this is the 200 EMA and the 200 SMA. We got a spinning top, kind of bearish. Jeez, that'd have been a nice little close right there. And this is the 9. So I trade with moving averages. I use the moving averages as support and resistance level. And I'll give you my moving averages right here. There you go. Look at that. Off the 200. Boom! To the 21, out of the trade. Out of the trade. And let's not use this one. Geez, that'd have been a good trade right there. I'm off the 200. Yippee-yi! We have 16 minutes left. Now let's check something out here. I want to show you something. Time for another education. Let's see what the 5-minute looks like first. Oh yeah. This is on 5-minute time frame. So that's a rising wedge on the 5-minute. And then on the 1-minute, and it's not as clean as the 1-minute, I don't think. There's the 1-minute. So a rising wedge is a bearish pattern. Depends on what time of the day it is, but this went on most of the day, more than half. We called this inverse head and shoulders right here first thing this morning. First called this dip. And then they called the head and shoulders. Then you had a triple bottom. You had a triple top. And then it created a wedge. And then I turned around and called a bear off that wedge. And it pulled back and hit the 200. You know, I did good on that trade. I made like $400, a little more than that. But I could have made $1,000. A little over $1,000 on that trade if I'd just been a little bit more patient. It had hit the 200 EMA twice now, so this is a major support level. If this doesn't hold, we're going to keep going on down. Let me look at the calls. 68.95s at $2. Now they're at 230. So you're still you got the 200, so you're still kind of squeezing in here with a double bottom. JYH, it's all about chart patterns, moving averages, and being in the now. And this chart pattern is a double bottom off the 200 EMA. And we're getting to the where it's, you know, you don't got much time in the day. You got 12 minutes. So you really don't want to play around. This is what I call the lotto play. You're probably familiar with that. It gets very volatile once it's about 10 till. If you're watching the option chain. See, these were called out at $2. Now they're at $2.65. And I'd probably just get out of them there. Or I would have, but I wasn't in them. Those are the 68.95s. And it was a double bottom. And this is what I call wall. All these moving averages are a wall. They're a boom. Geez, there's $4 right there. There's a 100% trade. And it happened right at 250, 350. 10 minutes before the bell. I mean, it could have gone either way. But you had the 200 here holding it up. And then you got to watch them candles once it breaks out of that. Man, look at that. 560. Now I regret not taking it. 630. That's 300%. $660 from $2. Yeah, I didn't take it. I should have. I should have. I mean, it was there. But you see how powerful that 200 EMA is? I've been working on these moving averages for over 20 years. I think I got it down to a fine art now. The 63 was the latest one that I added, and I think that made, well, besides the 200s, and that EMA was the one I added before. but I've gone through a bunch of them. And I only started out with 2. And that was the 50 and the 200 SMA. Then I added the 9 and the 21. And I took away the 51 EMA and added the 63. And then I added the 200 EMA. And that 200 EMA has got me in a bunch of trades that I would have probably not have got in, because we failed the 200 SMA, and I used to take them off that, and it would always go down a little bit farther on me, and I'd go, shit. I'd get out, and then all of a sudden it'd turn around and bounce. So now I got a safety just in case, if we hold the 200 EMA. And I use them as resistance levels. Also, if I'm under it and I run up to it, Five more minutes. 3 more minutes to go. Here we go with the triple bottom setup. And I missed it. Dadgummit. I'm getting them. I would have took that trade. There's your 1, 2, 3 setup. JYH. If you can count to 3, you can trade with me. So let me show you something here. On this trade alone here. So I'm going to build my little snake. If you're not watching. Oh, that ain't what I wanted. Let's get one. So that's my snake. It breaks out, it catches my attention. And I'm at the 200 EMA right here. So we got a double bottom. And it breaks out. And then it comes back down and creates what I call a triple bottom. And I take and run my trend line. I don't know if I'd have took this so close into close, probably not, but throughout the day you'll see trades like this. So I take the body, what's the deal here? And I'll run it to that next body, and that's called a triple bottom. So we got snake, breakout, pullback, boom is the strategy. Then you get out at the exit, you know, one big engulfing candle like that, you just go ahead and sell that sucker. This is on the 1 minute. And then it came back down for a triple bottom, 1, 2, 3. And then get out at the double top. And these are 3 white soldiers. And I always tell everybody to get out on that third soldier. So that's a chart pattern. This is a chart pattern, triple bottom. Breaks out of it, then pulls back, and that's when you want to take that trade. And that was a double bottom off the 200 EMA. And I called that out, but I didn't take it. And then boom. And that's all done on the 1 minute. Okay, well that's it. Everybody welcome JYH. And I'm going to get out of here. Watch my videos. And we'll see you tomorrow. Today was a good day, by the way. It could have been a good day. We got in early. Let's talk about that before I leave. And I've been trying to study penny stocks too, so I've been kind of getting back in that taste of mind. So I talked about this earlier We jumped in, called this trade out here at the very bottom, and if I'd have held that, they went to like $2,500. But you got it head and shoulders. You got the big snake breakout, and I was talking about the candlesticks that broke out with that double bottom there on that snake. Then we pulled back to a triple bottom. 1, 2, 3, broke out there. Broke out here with a double bottom, higher low, to a double top. And then we had the rising wedge, and I played the put. I held contract for quite a while, but I sold it way too early. I could have made a lot more. And then we bounced off the 200 at the end of the day with a triple bottom. So more or less it was a real clean day for all the havoc that we've had for the last 3. And we consolidated today. We had a big dip this morning. I don't know what that was all about, but probably shakeout or something. There's still non-believers in the market. There's a lot of people that are kind of getting shook up right now. But today the charts were real clean. Real clean. And they haven't been, they've been doing good. I haven't had a bad week. I think Monday sucked. But I came out a winner at the end of the day, but still yet. Monday was really a bad day. And I think they were just waiting to go into the Powell speech. And the Powell didn't do no help. They were still complaining and bitching. The fat cats. I can't wait till he's gone. It just don't seem like he's connecting with the middle and lower class. He's more or less in bed with the fat cats. People don't want to buy houses because interest rates are too high. Car interest rates are too high on cars. I think we could probably live life great without the feds. But you'd have to have some kind of, some kind of safeguards on Congress. Because they just spend too much. And they won't, and the feds should have more control with that. They should be able to have some kind of safeguards on them suckers up there. I mean, ever since Obama got elected, it's all about sharing the wealth, and all it's done is got us in debt. The printing of the money just hadn't stopped. Man, I wish these people would stop calling. I'm getting back in this thing again. Hello?
Hello?
Yeah, this is the Sneaky Snake trading strategy. How may I help you? If you ain't got nothing to say, do me a favor and go screw yourself. So, I think I'm done. We'll see what tomorrow brings.